Check 1, 2. Check 1, 2. Good morning. How's everybody doing this morning? Okay, what else we got going on here? Give me just a second, boys and girls. How do I don't know what this always happens to me. I don't know what this happens for this morning. Good morning, everybody. I'm going to switch it right over right away, okay? Hold on. Turn that right off. Get right into it. How's that? It's wild out there right now, isn't it? It is wild out there. Everything is crazy. I'm sitting here. I think I might be shadow banned by Twitter. I'm not exactly sure what's going on with Twitter. I don't know. They relaunched Twitter Blue, so maybe they're just telling 10,000 follower accounts or above. I guess they have this line here in the stand where they're gonna, if you got traction normally, you're not getting it anymore. We'll talk about that this morning at some point. It's kind of weird. I want to be a greaser, not a soch. And I don't want to get Twitter Blue. I'll be honest with you, I don't. And there's some mechanics going on in the background of Twitter. It's definitely affecting my account. It's been going on for a couple weeks, but it was ramped into the new launch of Twitter Blue. Whatever. We'll talk about it this morning. You saw indictments yesterday being handed down against some very well-known fin Twitters, right? What's interesting about that too is Mr. Zach Morris has come back twice now, right? Didn't he have a different? I think I've known that guy for some time. And I think I've like known him on social media in two different capacities, but I'm not exactly positive on that. Don't quote me on that. Someone was saying something about him yesterday, and I didn't say anything about it, but let me just check something here. View live in control room. I got YouTube sometimes acts kind of wonky. And I got to do some stuff as we get started here. Make sure we don't have any of the Russian porn bots in here this morning. Okay, all right, hold on here. All right, so we're going to slap that on so that only certain people can speak. Subscribers can speak. Let's start with yesterday. So on Monday night, right, I have an old friend that contacted me on Monday night, and I got drunk as a skunk. And on Tuesday morning, to do the live stream, I was like, I'm hungover, but then I realized that I was probably still drunk in the morning. Matter of fact, I got a bottle of Fernet Branca sitting around here somewhere, and when we finished with the Fernet Branca, that was it. It was all over. I was like, there's no way I'm going on live. Although I was very happy yesterday for that brief moment we broke through that quote unquote channel. We haven't done that at all this year. So that was a if the Bulls had any kind of a win this year, that was it. That was that one like the whale jumping out of the ocean or up in the sky when the jet's flying, then flops back down just to let you know that the Bulls are still here. I thought that was great. We'll talk about that too. We'll talk about that whole incident yesterday, the reversion. You guys got my weekly brief, right? I told you that no matter what happened on CPI, that we would come right back to, we would revert back to steady as she goes. So that shouldn't have been of surprise yesterday at all to any of you, that we would revert as well. Did that? And I think I said in that brief, I said I don't care if it goes up or down. And then I also talked to you in the brief about, I think on Twitter I said, inflation is coming down by their metric, and it would really have to be double, triple for any kind of an argument that it isn't coming down. I don't care about I saw people this morning pointing out small things like rent and this and that. I don't fucking care. And neither do they. They're a hammer on a nail. I think I said that at some point. That they're a hammer on a nail. They don't care about your little let's investigate CPI. I saw so much of that shit yesterday. Maybe when I fucking throw up. Sorry for swearing, but I was like, it doesn't matter. Inflation's coming down. What's crazy is no one ever wants to talk about unemployment ever, because it's bad. I mean, people have a hard life. People are working harder, working more to try to make ends meet. Inflation is still high. So when you tell people that you want to see mass unemployment, that's not nice to say. But that is what's said behind closed doors. And the fact that Janet Yellen doesn't say it publicly is bullshit too. And the people that can make a decision about your life or can really hurt your life aren't public about the things that they're trying to do. It's just kind of wild. Anyways, let's get all past all that. Let's go to the top here. Let me go to the. See, I think I was still drunk yesterday. I was like, there's no way. No, it's crazy too. Is that I thought yesterday, I was like, you know what I'll do is my wife had been asking me. She was like, if you ever want me to set up the stream for you, if you're not here or something comes up. So now I'm like, all right, I'm gonna have to teach you how to get this thing rolling for me. And I was like, there's no way. I was like, if I set this stream up, I'm gonna get on there and I'll be drunk. I'm like, no way that's happening. Okay, so let's see. Give me a second here. Let me close this out for a minute. So first, let's say some good mornings here. Good morning, Winky. How are you? Good morning, Matthew. How are you? How are you, Matthew? Dio, how are you? Let me see. I would have paid 19 to still only see content from people I follow, but not being able to control the nasty crap it was showing me every day was doing a real number on me. Yeah, so like the Twitter thing, I got some weirdness going on. I've got like people being muted. I've got like controls being wonky. Sometimes I try to post and I can't post video. And then it comes back and works. That happened when I posted the Elon Musk videos. So there's something going on in the background of Twitter. And then I think there's even I'm going to assume that if you don't pay for Twitter Blue and you've got like 100 followers or 1,000 followers, they're not going to, I don't think they're going to like, I forget what it's called when they do that, but they astroturf your accounts. But I would assume that if you are gaining followers or you have a post, that gets some followers or whatever, or some likes or something, that at some point they're going to start astroturfing you, trying to force you. I could care less. And this morning I saw some more Elon Musk news, and I'm telling you, I was just talking to a friend, and I said, and I've been a fanboy of Elon for a long time, and it's getting to that point. It really is getting to that point of. Hold on a second. Let me work on this Bookmap for you so I can straighten it out for you. Oh no, dude! I like Microsoft. Hey, we'd like to restart your computer. Like, all right, let's get some. We'll talk before the. How many minutes we got until the bell? We got 9 minutes until the bell. So I'm all over the place this morning. We'll talk about Twitter though at some point. Elon Musk, man, I don't know what is going on. Like, I don't know if it's just he knows. I don't know if he just knows that the stock is going down. I mean, that for a minute I was like, Maybe he's just airing all this dirty laundry now while he can, while the stock's going down. And so you just keep airing it and airing it and airing it. You don't know if he's shorting the stock too and selling behind the scenes. But I think that was part of my thought process. But as all this stuff is coming out, sometimes you make enemies. We'll talk about this later in depth about Elon. It's not good though. I like the alarm bells in my head are going off for the when these alarm bells go off, they're not the good ones. And it's like you have these different tolerance levels, and it's right there. And I think it's like that for most people at this point. And I'm even aware of it. So I'm gonna be honest with you. Well, we're going to talk about a bunch of stuff this morning. I'm going to show you guys every FOMC, I think, for this year, or Fed rate decision. Fed rate, each rate decision meeting. I'll show you what happened in those days, so you can see what to expect today and tomorrow. You have some awareness of what to expect today. So if you're tuning in, I'll show you some figures and stuff. At some point this morning, we'll go over all that stuff. We also have at Volatility Wiz coming in today at 1 o'clock this afternoon. This guy's a pro, man. This guy, I'm not going to tell his whole story. I'll leave up to him what he wants to tell. But this guy's a real pro. This is the kind of guy that I don't know. I don't want to say because I don't know what he can say or can't say publicly about his professional life and stuff like that. So I'll leave it there. But I want you to know he's amongst a very small group of traders on FinTwit that are known for all the shots these guys call come true like 90% of the time. 95% of the time they know what's up. They're like a crew of pit traders. They're a crew of professionals, all legit people. So to have him on today is, that's something that you're not going to get anywhere else. You're not going to get that kind of, you're going to get a bunch of people being interviewed today on different live streams. But it's rare to get a market pro sitting down with you as you get to trade. Probably the most important decision for 2023, the upcoming year. So we'll have him on later this afternoon. I'll be having to take some breaks today too to coordinate that, and I got some data for you guys to look at today and digest as the day begins. I do want you to know before, as we open right here, I want to go through briefly what to be looking for off of this bell here, or just some key things you guys got to know. Okay, this is teed up right now. We have, the market has teed this up. This is it right here, right? This yellow line is the trend line that's bullshit, doesn't mean anything. We know it does. We know it does, right? We know in a day. And I want you to see this is the 200 right here, right? On a daily chart right here, right? We blasted up, full rejection. We'll talk about this rejection candle too. You see the double top in here. Bears are going to tell you this, right? This the big time double top here. You've got the downtrend going down. You get underneath this 200-day, and you start counting all this stuff, right? When you look for classic setups trading, stuff like this and can't hold above here, right? No conviction here, right? This is all. This is looking kind of rough right here. It's basically teed up for everything to go against you as a bull, leading into this. Hang tight here. Leading into this FOMC, right? They're right there with big sellers up here. They rejected up here. This is your second rejection here. If you get underneath the 200-day, the setup is just there, right? I hope you can see that. It's not that hard to see. You know that the implied vol is here. You can see our trading range is just monster, right? And there can be a case that can be made for, as well for the bulls. How important this day is and where we will go off of any kind of perceived positivity by the market. We'll talk about that. We'll rehash some of that stuff today with you as well. What could actually be? It's funny. all these bears, these big bears, big high follower accounts. I'm like, they're showing you the yield curve. I'm like, man, the yield curve does not ever, not ever. It's not consistent at all in whether the market goes up or down. The most consistent indicator you can look at is unemployment, or for finding a bottom. And we know, I can show you historically where rates have just been ratcheted, and the market can go up. If the Fed can make, if the economic cult can make you believe that they're doing a good job, the market will go up. I promise you that. And they know this. And this is even with tightening rates. They could ratchet rates. And as long as the market believes that there isn't a problem underneath the hood, which, you'll see bears claim, well, there is with the yield curve, which I can show you that it doesn't. It doesn't. There are times when it doesn't. If the Fed can make you believe, the market can go up. The only one, I've checked all this stuff. I even went back through and checked the yield curve last night just to back test all this shit. And if you want to see a bottom in this market and you're a bull, you want to see that unemployment go up, man. You want to see like that'll roll us over us and blast us right down to the bottom. You'll know that's bottom. So anyways, just this stuff. I want you to see this stuff here, okay? If you're a bull, you have every reason to be watching bears trying to step in and short this market today into this decision. And you can see it right here. You got a nice bear flag forming right up here, right? 1, 2, 3, 4 days of it. Just looking for a chance for it to come out. You can see the big swing up here yesterday. Reverted right back down to that 4,000 level. I think I posted this yesterday morning and said, expect to bounce off 4,000. You buy the dip on this, right? Until this is broken. This is positive gamma. You want to see the bears need to get underneath this. Pivot point those at 403.86. It's the bull's job to get up and above this pivot here and break through this volatility level. The bears know that probably won't happen, so they're coming in strong to try to push down, get underneath R1. I'm going to show you R1 in a 5 minute. I think it's R1 right here. So I'm going to show it on a 15-minute chart right here, right? You get underneath this S1 down here. You get underneath this 200 on a 15-minute chart, man, and it's all over. And you know what I'll do is I'll change some of this stuff for you right here. We can just check let me see if I can get a 7 and a 20 one day, maybe. Show us on a 7 and a 20. I'll show the hold on a second here. What do we got there? 7-day, 20-day. Even just take these off. And let me see if I can make that style. Size. We'll make this a big one so you can see it. We'll make this not rocket science for the day. Nice and easy. No, we don't want that one. We want this one. Yeah, we want to turn this, let's say, yellow. Make this nice and easy for you guys today. Done. Oh, man, that's a horrible looking line. Style. What's that? Size. Oh, that says size is thick. What am I doing wrong here? Okay, there we go. Just off the bell right here, right? You don't want to be getting out. What's the 20? You want to be staying on a 5-minute chart. You want to be trading above this red line right here today, okay? Very important for bulls to be trading off this red line. You can see the blast off right off the bell this morning. It's a 5-minute chart. Nice green buy bar. Bulls need to get above. Hold on a second here. Scroll all this down here for you. Trading range is so huge today. Just pay attention to this red line today, okay? You want to be trading above this red line today. I'll put it back in the 5-minute here, but on here. I don't know what's going on with this wonkiness over here. Oh, this is this big line back here. Bulls need to hold this pivot line on an intraday chart. This is what they're looking for, right? And I can assure you that The bears going to be coming down here today, trying to short any kind of attempt above today. So I'm going to say to you that I expect today to be a boring trading day until we get the presser. Not the presser, excuse me, the press release. See if I can resize this. Put that vol, that book map up for you. You can see the sellers already coming in, right? These guys, these shorts don't care. These shorts think this market's rolling today. And I don't blame them for thinking the market's rolling today. They're stepping in right here. They want, hold on a second here. Bears are like, nope. It's hilarious to watch them. They're like, actually a little bit lower, aren't they? They're like right here. Bears are like, Bears just don't care. They're just like, I know for a fact the Bears right now are just trying to, hold on a second here. Right there. Look at that range. That's 420 up here. 415. 408. 403. This is huge. 397 down here. 392 and 385.70. We were just talking about this the other day like it was so far away. Remember how far away we thought this was? I think implied vol's at 35 today. I think it was at 30 on Friday or something. It's just been cranking. And we had major calls coming to the market yesterday. I was working on those gamma models, and I checked the. I didn't realize how many people bought calls yesterday. It was insane. People were buying calls all day long yesterday. Outside the money calls too, much higher. 420s, 430s. Saw some 440s yesterday. If I can pull that up for you at some point today, I will. But I was surprised at the call expansion of the market yesterday. It was wild to see. Look at that, just holding it up this morning. Look at this big support line down below. You can see 4100 above. That's right up here at R2. So 410 up here. This rough, or I think that's R. Right here is right around R2 up here. Should actually go back to a 5-minute for you. See if I can bring this over and show you better in a 5-minute. And see this right in here, 404.90. A second here. This range is just stupid. This range is actually difficult to actually capture. We're already up $1.10. And I'm looking at the call structure and put structure right now. Everything is, I'm looking at 0 dates right now, and they're, 1, 2, 3, 4, 5, 6 strikes out. I'm not even looking at the deltas on these things. Like the 31 delta 407s are $1.80 right now. 27 delta 408s are $1.47 right now. This is just insane. Price for an option right now for the moves that are being made. All right, let's see what you guys are saying. Winky, what are you, John? Good morning, Joe. John, how are you? Think there are enough big people with big money that they want to get it back to at least 3,500. That'll go back to 3,500 at some point. At the same time, I still think we should be hit 415 by 12:31. Yeah, I like that 415 number. Rest in peace, pumpers. Good morning, Kid Time. How are you? Yeah, I was wondering about if anybody had experience with Mr. Zach Morris and all those guys. What was it, like Hugh Henn or something, or Hugh or Hefner? He was all over FinTwit too, right? Someone got busted for making 3 cents on 50 shares. Are you shitting me? Good morning, Audrey Winkin. How are you? Dean, good morning. Ryan, good morning. Patrick, good morning. Young Traveler, good morning. Poor Badgers in the house. Rival Dave. Lisa, X, Rowett. We talked about this. We talked about, you guys ask me sometimes to like trade small float stocks, that kind of stuff. I don't do any of that shit. Can't do that shit. I got caught. I talked last week in a stream about getting caught in a pump and dump. I was in a that wasn't a small float stock, but it was small, and there was a guy that came in and told me that the whole thing was a pump and dump operation. I had become friends with him. He seemed like he knew what he was talking about, and over time, and eventually, he was like, "Get out now." He was like, "They're gonna come in here and dump all this shit," and I didn't believe him. I got caught in it, and I was fucking pissed. I mean, it was cool the guy said something to me, but we got a previous high over here, the closing high back over here. There's another one right here. Some sellers stepping in right now. Let me switch this. Let me switch these MAs. These MAs don't look good on, or I don't like them on this. Yeah, I don't like them on this chart, this 1 minute chart. I always like it like this. Some spread out on a 1 minute. No one interacts with me on Twitter anymore. Yeah, there's some weird shit going on. I won't get traction on posts. And what's crazy is traction I'm getting on posts have to be like edgy or some shit. It's really weird. Twitter's like algos are really, really acting up. Told them to do it, and they front ran on announcement from the group. Twitter pumpers. Yep, of course. Hold on a second here. So Joe Harper might come on this morning. He's saying he could talk. He doesn't have set up for video and such. Okay. I'll get in touch with him here in the next few minutes. What do we got? Fun part. The fun part will be looking up those guys by their real names who were published in the SEO documents. Yep. Russian porn bots aren't allowed here. Yeah, this is the He-Man Russian bot porn hating club, right? I did not think CPI report would just fade. Yeah, so I sent out a brief this weekend and said it should fade. Any sell off yesterday or not sell off. If the CPI report had a sell off, it would have rebounded back up. If the CPI report was a good report, it was coming right back down. It wasn't going to hold. No way, no how. It's all about today. The show is today. Though there is an amplification tomorrow, depending on which direction we take. I would be hyper aware of that. That we have a bunch of data dropping tomorrow. Some of it's employment stuff. Yeah, I was drinking with some market professionals not last night, 2 nights ago. And it's like it's funny. I'm like, you know what? This shit happens always during the holidays. You're like, I haven't seen that guy in how long? A year? And of course, it's the holidays. So, that's my bad. Yeah, Joe asked me if I got rid of my hedge, and I didn't. And there was no way for me to get rid of it anyways, because I would have had to have gotten rid of it outside of market hours, and I couldn't. It's an option, so there was nothing to do but hold it. And I don't think I would have gotten rid of it anyways. My hedge is built for a move to 415, 420, 430. I'm comfortable with it to about that range. Yeah, dude. So like if you have a shot of Fernet after a meal or something, or before you're going out to eat or something like that, it's fine. But if you're ending the night fucking just slamming shots of Fernet Branca, you know it's gonna get ugly, and it got ugly. It got ugly. That's all I can say. What else you got? Hold on, I'm coming through some of this stuff for you. I'm trying to get through all of your chat right now. Let's see what you guys are saying. Oh yeah, so Winky's asking about did they vote on his compensation yet? That's a big part of it, Winky. There's some big stuff in the background. They want the stock price low for his compensation package. So some of you guys know that. You've also got some issues with the float loan, right? For the purchase, and in that float loan, who's backing is more than likely banks, right? So there's some leverage there. Powerful people will want to take over Twitter if they can. Any in they can get in to take over Twitter, they will. Good morning, Garrett. How are you? Why can't you ban people on Twitter? What do you got? YouTube? What are you talking about? I don't know what that's about, Winky. I think I missed some of the chat. Press light about or polarizing. Click the like button. Thanks for saying click the like button. Please do that. Please click the like button if you can. Good morning, Tony. How are you? Good morning, Kato. How are you? Good morning, Constantine. Good morning, Troy. What's my prediction for today? Yeah, we'll talk about my prediction today. I'll lay it all out for you. I got it all laid out for you today. Good morning, Satchel. On the contracts at the pre-morning spike, 3 early roughnecks. Right on. We can't break 408 today. I think it's over. There's it's not 408. That's a very good question. I want you guys to see it here. It's not 408. It's right here. It's 405. It's right there. See this yellow line right here? This is the line where the bulls got it going on, right? Time's been passing. We've been grinding higher. This is really the line. And then, of course, you want to get over the That no, not that. Yeah, no, not. Let me take a look. Now you got me scratching my head here. Yeah. So the bulls are maintaining the 200. I want you to see this 200-day moving average right here, and the bulls are maintaining right now. Very bullish for the bulls, but they want to break out of this. They need to break out of this. I know they say this doesn't matter, but it does. This does matter. This is where sellers are hiding above. Bulls need to hold this with conviction. Forget this red bar. It means nothing. Well, it does mean something because of this red bar above here. So that's like 410. You guys want conviction? Anything above 410.02 is huge. But you've got some other stuff going on. You just broke above the 200. That's a huge move for the bulls. So for right now, being above the 200 is big. But you're gonna see up here that the Bears are gonna want. I'm telling you, the Bears have every setup right now. I promise you, Bears have every setup. They have every setup working in their favor today. Yeah, I miss you too, Liam. What's the red line? I don't know what that one is. Oh, that red line down below. That's a gap fill. Oh, not a gap. Yeah, it's basically a gap fill. If that's the one down below you're talking about, insane rage. We can go places. Agreed. Yeah, but they've priced it into this market. You can see the implied volatility and the option pricing this morning. Good morning, Juventus. Good morning. Good morning, Robert. Yeah, we can go over gamma at some point if it's slow enough today. I'll tell you guys, the truth is this. You're going to see this market get quiet after Friday. You're going to see live streamers take vacations. You're going to see video makers take vacation. You're going to see Twitter get real quiet after this weekend. So we're going to have a ton of time to go over gamma stuff. I'll explain gamma to you guys in depth. I can talk to you. I can tell you every single last little part of it, how it's derived, how zero gamma is derived. I'm actually doing all the math with my daughter right now, and so I'll go over all of it with you. I'll go over the equations with you. You guys are gonna get access to some really cool stuff too. So you can check your own. You can check for these levels every morning on your own. I'm going to try to start getting it for at least the major tickers. I'll try to do it for all the indexes every morning, and I'm going to try to do it. Let a beautiful bounce right off of VWAP here. Just blasting the R1 or to the pivot line. Look at this. It's hard to even show this stuff, right? You can barely see VWAP here. Just broke through the two highs from the end of the day yesterday. Now trying to make our way up to pivot. That's 403.86. Should I bring this over maybe for a minute so you guys can see it? Because kind of the range is so large that it's hard to. I'll just keep these over here so you can see them. You can see VWAP where VWAP is. Just full on bought the line on VWAP. These are all like pro trader rooms doing this shit right now. I always find these days hilarious because it's all classic setups usually. Good morning, D. Crosby. Good morning, Scott Conley. Yes, Winky. I will, Winky. I'll make you head moderator of that whole place, except for your wife's boyfriend. He's been breaking his balls in there for months. You can be co-moderator with him. I know people get salty with your wife's boyfriend. Hopefully he's in here right now, but dude, the guy's committed. So, but Winky, definitely. I'll get you admin privileges all over it, brother. Morning where we roam. Tesla has suffered enough. Why do they keep doing this? Yeah, we can talk about Tesla this morning. I'll tell you what, man. Tesla, dude. Made a doc program that calculates zero gamma based on supplied quote tables from CBOE. Spits out a nice little graphic on a local webpage. Hell yeah, Matthew. That's what we're working on right now. It's badass. Good morning, your wife's boyfriend. Saw something like that on GitHub written in Python a few days ago. It's pretty cool. Yep, I've been all over GitHub as well, searching for Python code for gamma modeling. The November 10th still hasn't been retested. I second Winky Face Room, definitely. Bet we grind higher all day long today. Cap check Tesla. Tesla's down right now. We'll talk about Tesla. You want to be seeing, there's a couple of things about Tesla you need to know. Is that they have a put wall at 150. If they get cascading waterfall puts on top of those from an institution, we need to talk about that with Gamma too. Dealers are like, the dealer percentage is like 8 to 10% of the market, and you have real money buying, real money selling that takes place, and where it doesn't matter if the dealers try to delta hedge those puts. They don't. The market makers don't want to. They don't mind coming close to printing those puts, but they need another round of put buyers to come in panic and fear. So that would be the place where you see Tesla dump from 150 down to 136. You need to see real money selling from institutions, and that could either overtake the options influence, or you need to see waterfall put buyers, protection buyers, in a capitulation moment. You'll see that sometimes when margin calls take place there. If I'm a long-only hedge fund, I have rules that force me to hedge at the worst possible times. And that can create a cascade effect as well in a stock. So if you see that in Tesla, we can look at Tesla if you want here in the moment. I'm going to assume that there's some sort of a trigger for long-only hedge fund, or not hedge fund, but like portfolio managers that are forced. Nice little ping right here on 403.86. Look at that, 2 pennies, wham, slammed right into it on the pivot point. Please like and subscribe to these videos if you're tuning in right now. I'd appreciate it. It's a free sub, all maintained by the community. We have people working in the background, not being paid, so I appreciate if you guys could like, subscribe. If you're watching this video this morning, just slap that ask above on 403.86. Gorgeous move, right? Pumped right up off the bell. If you're watching a 5-minute chart in the 20, came right up off it, traded up barely a test on VWAP, and then slammed right above on the pivot point. Yeah, as a Hugh Hen, what's thoughts and prayers level for Tesla, please? We can go over Tesla thoughts and prayers. There's no real like thoughts and prayers. It's more about it's more about here, let me bring up Tesla real quick here. So what? I live streamed with you on Monday, right? What did I say to you on Monday? I put this here for you on Monday, and I told you, right? I said, this is very bearish, right? Right, this move right here. Told you, I said this was uber bearish. And what happened yesterday, right? Came right up to pivot and slammed right off it. So you should have already known this. Haven't changed this chart at all. And on Monday, I told you how uber bearish this was. Now broken through S3 from 2 days ago. I haven't recharted this today yet. I did release the levels for you, and I showed you this buy point down here, right? I told you why. Well, I can show you why again if you want. Now there is something to be said for. There's some kind of a put wall down here, okay? There can be capitulation down here. If it triggers, this would trigger like waterfall hedging. So it's usually considered the worst possible time for hedging. And what they would do is they would pay out the puts at 150, right? Slam down real quick, pay those out, and then slam back higher. And that's down lower at 136. We can look at that if you want. It's right here. Right here, 136. So you have that quick capitulation moment down here. You would see would come right down here. And what would happen, this could happen today, right? With the Fed rate decision doesn't go towards tech. You'd slam down, you'd trigger a protection trade, basically. And what would happen would be you'd start to see the initial impact of that trade made. You'd see the monetization of this of all the puts that are down here. And then you would see these long only hedge funds get trapped in those puts. We'd move higher right here. I don't know if you guys understand the concepts, these concepts of how this happens. Does that mean that happens today? I don't know. Initially, the expectation would be that at some point down here, the dealers aren't going to want to print this. And you've got a double bottom forming currently at the moment on a 2-day chart on Tesla. But this is how stuff like this gets set up. If you're a bank that wants to buy cheaper down here, you break through this 150, and the assumption would be that this would trigger that. And that's how you get these capitulation moments where it's like you blast down briefly, and you trap all these people. We've seen this. I don't know if we've seen this year, but in previous years, I've seen this exact thing happen. And then 2 or 3 days later, you'll actually hear that companies or funds, long only funds, got caught in this. So that's your tail risk right now for, or I would say for, if you're a Tesla bull, your tail risk is just somewhere down here at 136. Do I think it can blast lower than that? It would depend upon a whole bunch of other stuff. And the bulls have something coming for, or the bulls want to see unemployment grow. I think you might see that tomorrow. If you start to see unemployment move up as inflation is coming down, there should be a point where we find bottom in the market. But no, I don't think we've seen bottom. I shouldn't even say that. It's the only indicator that'll show you the true bottom for the next bull run. Is when unemployment really starts coming up higher. I don't know why no one talks. I think people don't talk about that because it can turn off followers. They can turn people off to say that you want to see blood in main streets. Now, just be conscious of this down here. If you're a Tesla trader, you're looking for something like this. You're looking for, like, I don't know if it's today or tomorrow, but you're looking for some kind of move down here. Bam, you trigger it, and it just blasts down, and you're waiting to buy this down here. If you get great economic news today, or rate decision news that is supportive of tech, now you're looking for like 150, 155, anything in here to be buying later this afternoon. Now let's talk about. I was DM'd this morning by somebody, and they said something to me this morning that was important. I didn't have a chance to reply to them, and I'm not going to mention who they are by name or anything. So we've got the Fed funds rate announcement at 2. And then we've got, this is where they're all, if we have a good Fed funds rate announcement, you guys know at 2:30 what happens, right? 2:30 is always usually the nasty part of the day if there is good news and bad news. We'll talk about that this morning as well. But be aware of this if you're a Tesla bull. I'm a buyer, like full buyer at 990, right down here. About $113 to $92. I'm a buyer down in here for Tesla. Look at this beautiful buy here. Big giant green bar. 1 hour chart. Beautiful. Cranking. You want to see where that 410 is above there, right? This is insane looking at this. If bulls can get up here and hold above this, right? You'll be looking, well, this other little nastiness here. This is constructive for bulls to be going up, catching this 408. Sometimes when there's anticipation of a good report from the Fed, some kind of a dovish, you'll see us trade this up all day long on Fed days. Sometimes people say that's a bearish on the Fed days, but it usually isn't. Because someone's trading this higher. A lot of huge buyers coming in right now. Move R1 over here so you can see it. Quick liquidity break. How's it going, fishing? Hey, Panfish Dan, brother, how you been? How's work going, man? You off for a little bit? You get any holiday time off or what? Vol crush and pump or reality dump? They all were all over FinTwit. Yeah, they were all over FinTwit. It was. I know. I got a letter in the mail a few days later about I know class action suit. That's the part about those scams, the meme stocks, that it creates a lot of FOMO for regular people, and then you start believing that you have to participate in the stuff to compete. Yeah, Winky's making a good statement. I was pretty angry last week. As a matter of fact, I have to make somewhat of an apology to somebody out there because I was going on a Twitter rant. Well, like 2 or 3 weeks ago when Brookstone or whatever, when Jay Powell had his speech, I said, look, in the next weeks, you're going to see growth stock pumpers come out like crazy. And then I tweeted that on Twitter and was going on a rant. And somehow Twitter algos picked that up and started putting in my feed growth stock pumpers. And some of those posts were growth stock pumpers and some of them weren't. And I ended up like retweeting a bunch of these tweets, and some of them were, some bad guys, and one wasn't. And he messaged me and asked me why I had made such a nasty tweet. And I don't normally delete tweets, but those tweets I had made, I'd gone back and deleted because I felt like it was unbecoming of me. I was really nasty and I shouldn't have been. And so I was deleted. I had already deleted it. And he was like, well, what's up? And so I was talking to him and I was like, look, it was Jonah Lupton. And I was like, I didn't know it was you that I tweeted that. And I felt bad. I apologized. I was going to make a public post about it, apologizing to him. And I haven't done that yet, but I'm going to do that. I just need to make a craft post that's not that looks good or whatever. But I explained to him how angry I was with stock pumpers, and I was angry about new traders getting trapped in that shit. And when you're in a bull run, it's very easy in a bull run to think you're a great investor and a great trader. Especially if you come into the market for the first time as a bull, let's say, and you get swept up in being a bull. I'll say this. If you come into the market and you're a bear, you get murdered in a bull run. If you come into the market as a bull in a bull run, you think you're the best investor and trader that God's ever seen, right? And then the moment that the market turns for any length of time, like this environment, a year, 2 years, you get destroyed. You get so there's this thing where, like, if you make a bad trade in a bull run, it's gonna print if you just hold diamond hand, right? But when the liquidity dries up in the market, even when we go up, in this kind of a market, if you're a bull, you have to be very tactical. You have to be very you have to be spot on. And if you can make it through this environment as a bull, bull runs are a cakewalk. But so many investors and traders come into this environment from a bull run, and they can't adapt to this environment as a bull. If you make it out of this environment into a bull run, it's glaring how good of a trader you become in those bull runs, because of how tactical you have to be in this down market as a bull. There's no room for error. You get penalized the moment you make a mistake in this market as a bull. Right? I've never had more trading rules than in a market like this, ever. There's no room for error. There's not a lot of money to go around for you as a retail trader as a bull in this market. As a matter of fact, I know I talk to bears outside of Twitter. I have friends that are bears, and not public, but we talk, and it hasn't been easy for bears either. This market has been brutal for most retail traders, and even the statistics out there show the same thing. That you might think that bears are doing well in this market. This market is gnarly. There's just not a lot of money in this market. Saw those big giant balls up there, right? They're just buying this right now. Just smashing and bashing. So this person called me and asked me that question. When do you, how long did it take for you to start making consistent money? That's not an easy question to answer. I've lost money all through my career. I've lost money. So I don't know what to say to you about that, but I can definitely say to you that if you're losing money, today's event is probably not for you. Whenever we have these events, I try to impress upon people that, and I know that you can take both sides of the trade. I know you can buy, fire out OTM puts and calls, chase one side, cut the other side loose. But for some young trader out there, events like this, I'll tell you what, I cannot tell you. If you speak to a pro, right, they usually sit out today, and they trade the reaction. They trade the reaction. They trade tomorrow. Events like this there's no need to trade them. You're talking about an event today that's going to decide, basically the rest of next year. To some extent, it's going to tell us where we're headed. And there's so much time to trade the reaction off this for you not to lose all of your money. So I'm going to say that to you if you're listening right now. If you contact me on Twitter this morning, I'm going to let you know that days like today, it's so much. You guys, we trade this all the time, man. We make 100, 300% plays all the time on SPY is the kind of thing. SPX, ES, it's just a cash machine. And so when these events happen, you just don't have to trade them. There's just no requirement to trade these. It's always better to trade the reaction off this stuff. SPY's respecting the dark pool. That's what you guys are saying. Yeah. I'm telling you. I'm telling people. I'm telling you, these events, wealth preservation is your number one responsibility to yourself at all times. So I have a question. Why not trade yet? You were going to ask me why not trade yet. I'm going to explain it to you real simple. I make this really simple. Why not trade yet? I'm going to make it really simple. Why not trade? It's a good question. Because you've got, it's a 3-month chart right here, right? You've got So much time to trade this. So much time to trade this. So much time to trade this, and you're trying to jump into. I mean, you can trade it. If you have $100,000 and you want to trade $1,000 or $5,000 on some shit lottos, you can. But to be like, I've got $1,000 in my account, I want to turn it into $5,000 today. I don't know. No need to lose your money when you're gonna find out directional. It's like when we're down here, you get told don't buy this down here, right? And then we're up here, and you're asking me to take calls here. I'm like, I don't know, man. I'd rather just let them decide where we're going and trade that afterwards. I'd rather take all of this in here. And then, so, if you're looking at just right here, right, this whole move right here, I'd rather take the meat of this trade right here. And I'd rather leave the, the crazies down here and the crazies up here, right? This is the meat of the trade right here. This is where you make your money. So that you can trade lottos up here. Does that make sense? So you can do lottos up here. How about this? If you made money this whole run up here, throw a couple grand down. Throw $5,000. Throw $10,000 down. All the power to you. You can trade this. Trade away. You deserve it. That's how I feel about it. I love trading zero dates on Fed days. Love it. But if anyone's asking me like, what are my thoughts on it, or should you be doing it, or anything like that, I think there are way better days to trade. Easy setups most days. No risk. You have risk of 100-point swings today and tomorrow. I think it's today and tomorrow. I think is when the vol starts to kick off, or we start to lose some vol tomorrow. Where things get easy. It's like easy street, almost free money. I don't care if we go up or down. It'll likely be easier, much easier money. We'll talk to a volatility wizard about that as well, because you can actually look at down the line in the implied volatility. You should be looking to see if more puts are purchased. After today's event, you'll know if we're going to roll the market over or not. It's pretty easy, not easy, but you can see into the future a little bit. See if we're going to get a Santa rally or not. Just a second here. I want to see if I can get this on here for you. Rodrigo Khan saying big money loading calls, 25 coming. Good morning, Guru. How are you? So even though it's going up, it's still too risky. No, I don't think it's too risky. I think that it's. I think so. I'll be trading today, right? I'm gonna trade this event today. But at the same time, when I'm looking at different time frames, and you're gonna go full account on a Fed day, it just seems there's just no need. There's just no need to. You guys are funny. I always try to find out who's. I trade retracements. Why are we all here today? For DGen trades is why we're here today. That's why we're here, Mr. Unrealized Profits. You guys, I'm telling you what, you got zero dates up here, right? That are outside the money for $2. that'll be worth like 30 cents if in a blink of an eye. Get some nice consolidation here. Way outside of VWAP at this point. Sellers trying to come in and roll this over right now. Now 404.32. You guys are hilarious. I always love you guys. I love all of you. Waiting for Cap to get somewhere, you dirty. Yeah, I know. They're trying to roll it right now. You can see the red balls on Bookmap. Starting to see a little bit of weakness. Trying to send it right back over here. Look for this VWAP down below. It's about 403.13. See if the bulls can hold on here and try to tag a higher high. I think there's no back to normal, but they need to create bag holders above, I suppose. There's like this from my perspective. I think I've posted this before. What if you look at the charts that I show you, if they trade this market sideways and down into 2024, the risk of doing serious damage to companies and our economy. So you have to look at this from the perspective of the Fed. Is you have economics, right? I heard someone say this yesterday. You have the idea of what our we have like economics, right? A degree you get in economic theory. And then you have like the cult of who controls our economics in the United States. You've got the Fed, the Treasury, politicians, you've got corporations, and modern monetary theory right now, trying to push and pull the levers. You've got currency markets that are hidden from your sights, right? You've got mass manipulation. So there's if you look at the market, and if we trade it sideways and down for another year, waiting for unemployment to come up, the longer we trade it sideways and down, we're going to end up going down to those levels you're looking for, 2,400, 1,600, 1,400. And I think the Fed knows this. I think Jerome knows this. I think Yellen knows this. We did this before in 2000. We did it before in 2007. If we slip underneath the weekly moving average, if we start trading sideways and down into that weekly moving average, we slip underneath it. Then at that point, we're just waiting for real damage to be done. So can you blame them for thinking, well, you know what we'll do then? We'll trade it up, and we'll just hammer it back down again until unemployment rises. So the damage is down to 3,500 or 3,100. They want to see a bottom around 31, 3,200 probably. They don't want to see us like trade down to 3,100, trade sideways for another year, and then get it down to the 1,400s, the 1,600s, the 2,400s. They don't want to see that. I can promise you that they don't want to see that. So I don't know if that's the only way for us to get unemployment higher. There's this whole rationale. If you look going back into the 60s and 70s, actually pre that, right? They used to use inflation to keep high employment rates, and they switched to easing to an easing monetary policy. But then you had the Volcker moment, right, where Volcker raised rates and made the market believe that he was serious, and the markets went up even though they cranked rates, right? They just kept cranking rates So they believed Volcker. They cranked rates, and the market believed, and the market actually went up. But what was going on underneath was the unemployment rate was rising. And then we had that rollover capitulation moment. They eased back on rates at the same time, and then we had that capitulation moment. Market crashed, but the crash wasn't as brutal, right, as it could be. So there is this argument that the Fed, and this ties into the Fed is going to pivot at some point and become more dovish. I think you get 50 basis points today. I think you get the 50 basis points. Some people have disagreed with me on this. I think if they did 75 basis points, this market has a real chance to go up. I know that people disagree with that, but I think Goldman Sachs gives it a 30% chance of a 75 basis point rate hike today. I think that's the dark horse in the room. If you can trick the market into thinking that they're taking inflation serious, well, we already know inflation is going to crash this year. That puts them into needing to pivot historically, but they haven't gotten unemployment up yet. So if the market can take them seriously and they can keep cranking rates, you might see unemployment rise, and you might see the market go up. There's a real chance of that happening. We've seen instances of that in the past. I think 50 basis points. I think 50 is on the table. I don't know what they're going to do. The longer that they wait with this, we're not easing shit. So, anyways, Jonah Lupton. If you ever catch him out there in the wild or whatever, go check him out. I shouldn't have been such in a shit mood that night, but I was so pissed. Not at him, but at all the fucking stock pumpers, man. That shit bothers me. I've been caught in that shit in the past. A little bit of a break here. Bear's stepping in right now, trying to throw it down lower. Some distribution coming in right now. Yeah, we've already done the chart. I've already shown you guys. You guys want to see them again, like the Fed funds rate? You guys want to see that stuff? You guys interested in that stuff today? I thought I did this on video last week. Went through the Fed's fund rate, inflation data, unemployment data. We can go through it again this morning if you want. Yeah, I'm not I'm bullish here, but my overall viewpoint is that we roll it over no matter what into January or March. We're gonna retest that weekly moving average. I promise you. I don't care how bullish. I don't care if we're bullish today or bearish. We're retesting. You're gonna see the weekly moving average get retested for a move higher. There's a high probability of that happening. I'll put a poll out right now. Find out what you guys think. What the rate? I'll put a poll out. Give me a second here, and I'll do a poll. Find out what you think is going to happen. If you're just joining us for the first time, feel free to subscribe and join the chat. Chat's friendly. Ask questions of people in the chat. They love to answer questions, and we've got a diverse mix of people in here with time and market. Give me just a moment here. I'm going to launch a poll for you to answer. So I'll ask you in this poll. Let me see here. Now I'm not going to ask you about the terminal rate and what you think they think. I was wondering that today if they could do what the reaction would be on a higher terminal rate, raising the terminal rate. I'm going to ask you about what will the what rates will be announced today. Let me see how. I'll give you 50 BPS. See what your thoughts are out there. 75 BPS. A minute. Hold on here. Do they shock the markets today? I'm just going to leave so I got 50 BPS, 75 BPS, 25 BPS. And then announce a pause. I'll give you another one with announce a pause of some kind. And that could include a 25 BPS or no rate increases. And I'm not going to ask about terminal rate right now. Let me see it. I think I got this. Post that to you right now. If you guys want to answer that. Yeah, YouTube asked me if I want to insert ads in this, and I'm like, no, I don't want to insert ads. I truly believe that if I would love the 75 BPS. I'll be as a bull. I would. As a bull, I'm looking for 75. I want to see 75 BPS, and I'd like to see a shock. Go down, slam down on the weekly moving average. I would love to see it. And then the Fed comes out, J Powell comes out as a presser and says some kind of nonsense. They're going to reverse course. See a spike in unemployment. See corporations saying they're going to lay off everybody. Try to jumpstart it for a little while. Everyone has faith in J Powell, the Fed. Some kind of a jumpstart like that. I think that's their only chance. No way they'll shock the market into the holidays. That would trigger a purge nationwide. That's their only choice. They really are backed into a corner. I think the Fed can see that. I think the Fed can see that they're backed into a corner. So you either shock with something like that, or shock with a pause, or a 25 BPS. My gut instinct is telling me that if they stay the course today, right? If they stay the course, 50 BPS, unchanged terminal rate. That's what is he thinking in the background when I just keep backing myself in a corner, back myself into a corner into springtime? It's gonna get nasty. You're gonna see unemployment just plunge. The longer that they wait, they're gonna think that they're over tightening. CME is given 18% chance of 75 BPS. That's still high, isn't it? Oh, here comes the bulls. Let me get the red pen out right here. Bulls wanting blood right now. Bulls hucking it over right now. VWAP right here at 403. Watching this right now is hilarious. Get bullish or bearish here for a minute. Did I say bulls? I meant the bears. We got 67 votes on will there be a rate announcement. Let's check out what they're saying here. See what the poll says. What the respondents say to the poll. So what rates will be announced today? 50 BPS is the consensus. That does make sense to me. 50 BPS. Only 19% think there'll be a 75 BPS rate shock. That's in line with what the CME is saying, right? 19%. Announce a pause, 7%. I'm shocked at that. 25 BPS, 0%. Nobody thinks 25 BPS. That would be a shock too, right? A lower rate hike, 25 BPS. Now, the last question I'd be posing to you would be, if they stay the course with 50 BPS, once we get into the presser side of things, that's where it always gets interesting, right? CME yesterday said 75 was 26%. There are a ton of 190 calls this week all of a sudden. Yeah, you know, there's this thing about how do dealers hedge indexes versus stock. They do it differently in stocks versus indexes. So your term rate was 4.5. 25 BPS rockets to 430 in 2 minutes. Would be incredibly bearish, causing the signals things are breaking a lot faster than the Fed thinks. Yeah, I think the 25 BPS is as much of a shock as the 75 BPS. I don't think it matters. I think there's a shock there. Terminal rate is the real question, right? It is. I think that bulls don't realize that. I think market participants aren't old enough to remember that the market can go up with rates being ratcheted up. There's a market narrative right now to trade the market down, and I hear this narrative all the time that the market's doing the work of the Fed. I find that a hilarious argument. If that's the case, then the market has the potential of going up with ratcheting right now. Most important thing, in my opinion, is if Jay Powell brings up wage pressure. Inflation is going down, so the only thing that keeps the Fed foot on the gas is wage pressure. Pain trade is pitting to 4,000 area for next 2 weeks. Oh, so MS is thinking we get the 25 BPS. I think that would be a shock too as well. I like the idea of the Fed staying the course at minimum. Just staying the course. I like the idea of it. You need to get unemployment up. Unemployment's a problem. Non-stop Tesla puts. Is every hedging with Tesla? What's Tesla doing right now? Still bleeding? Yeah, it's still bleeding. There's no real volume spike here. We have 7 million men sitting at home playing video games. Yeah, I like the idea of he has to. Well, I don't know. He's in a corner. He's backed into a corner. He really is. Stock market is the ultimate video game. That's true. Hold on a second here. Book's kind of even right now on order flow. Bear's trying to jump in right now and throw this back down to VWAP for a trade. If you missed all this as a bull, you probably want to be trading VWAP here. A little bit of a curl on VWAP right now. See if we can get a trade going in here. Maybe I'll take a trade with you guys. This one green down here. Something like that. See if the bulls can hold on. It'd be irresponsible if Powell. I don't know if it's irresponsible. I think Powell needs to. I think he's stuck in this place where he has to either jumpstart it, we plunge down to the depths of hell, bounce off the weekly moving average, and go higher. I think that's his only chance, and then sell the market down once unemployment rises, and you don't get the depths of hell. I think if he tries to, he's on this leash where if he trades this market sideways and down into 2024, and we'll make attempts in January, March, we'll make an attempt at the end of the year of 2024. And we're going to be looking for that TLT trade, right? If that happens, we'll look for that TLT trade to go up, and we'll look for HYG junk bonds to go down. We were talking about a documentary that some college kids made the other day. There's a bootstrap tech recession going on where these college graduate tech or computer science degree kids are talking about not going to work for big tech companies, striking out on their own, that the pipeline is disappearing into those companies. You'd send out your resume package to 100 of the top companies, and you get a job somewhere that was easy. I guess all these kids are afraid now. They all want to go off on their own, that there's going to be some kind of a big tech recession coming up in the next year. I always like to hear what the kids are saying out there, sometimes more so than the adults, if they can see it coming. That's that sideways trade. That's that 50 BPS trade. It's that sideways and down. Bears don't want to give it up, though, do they? They want that bear market for another year. They want that bear market and that plunge, no matter what. What do we have above there? Is that 40, 405, 405? How much 405s? They're so expensive. $3. $3 for 0 dates. Whew. $3,000 trades right here for a 10-pack. Not. I'm looking at this trade right now, and I'm like, this is insane. Let's see what's higher over here if we break through. Same above 410. Can see the supply above. I want you to be. Hold on a second. I want to let you all of you know today that be careful in these vol trades. The moment the event's over, your $3 calls are going to go to be repriced. I promise you. Market can be going, so you'll take the money off once the vol is once we lose vol in the market and re-enter the call side or re-enter the put side, whatever side of that trade you're taking. I'm watching some calls right here. Looking for 410. Some resistance right here. Got a block of sellers here and above. Got another block somewhere up in here. Yeah, I've got a I'm in a trade right now. I'm close to being stopped out of it right now too. Just a second here, I'm going to trade. There's not a lot to be made on this right now. Like trading pennies here. Risking thousands for dollars. Come on, baby. Come on, you dirty dog. I'm going to get stopped out here. I know it. I entered somewhere in here. I'm going to get stopped out here in just a minute. More buyers than sellers right now. Keep on grinding, baby. So I'm going to take a look back here. Give me a second here, okay? I'm going to look at some where they were selling off yesterday. $405.79. Yeah, here's 405 right here. Give me that last little push up, baby. Get up there. Watching some bots come in right now on the put side. Let's keep fueling that rip. Just raising some stops now. I'm on 405 Cs. Tagged 404.51. Come on, push, baby. I'm like a penny away from getting stopped out at 304. They keep bouncing around. I'm out. That was it. That was like a 15-cent trade on $3. That's absurd. Yeah, I'll show you guys. You guys want to see some give me a second here. I'll get you guys some stuff here. Give me just a second. I'll show you some returns on Fed days. All right, so got stocks have sold off on Fed Day lately. There's some interesting things in here. So this is the day of, right? Some you can open this up on your own charts. You guys want to look at this on your own charts here, but you'll see there's some interesting places here. Like so, back here in March, we were on March 16th, right? You can take a snapshot of this on March 16th, right? We were green 2.2%, then we were 1.2% the following day, but we were already at the bottom of a channel coming back up. So we stayed on trend is the key point takeaway on the 16th. Same thing on the 27th of July, where we were green the first day and the second day. There's no real correlation here, right? And you got 75 BPS here. We had a 1.5% day, and then 3.3 down the next day. But if you snap lines on your charts, we were already in trend to go up on July 27th. Same on the 16th, and then you can see these other days here. We had negative days, right? 2.5%, then 1.1%, 1.7 to 0.8. The key takeaway here is that 4 out of 6 times we had red, either better positioning higher to take the red trade. We just started selling off at some point the first day and the second day. But you guys can snap this and take a look on the chart. We tend to stay in trend where we are is my point behind this on Fed rate decision days. You just pause the video, go back and take a snapshot of that, download it, snap some lines in your chart so that you can see what happened after these Fed rate announcements. So you get people that'll be out there telling you like 75 BPS will do this, 25 BPS will do that, 50 BPS will do that. The truth is, most of the year, we stayed right in a downtrend. If we were in the bottom of a downtrend during a rate decision, we were still heading up anyways. We were already in oversold conditions. We traded higher. We'll take a look at I'll show you some other stuff here. In 60 seconds, Bloomberg's reporting this morning about the 60 seconds before the CPI hit. Heavy trading drove the mystery rally. What else are we looking at here? The mystery rally. I love it. This stuff's killing me when I see this stuff. We'll take a look at some. In a second, I got some stuff I'm going to bring up for you. Just clean this up. Kind of glad I got stopped out of the trade now. It's rolling over a little bit. Give me 1 second here. You know, I have to get in touch with VolWiz real quick. I'm going to take a quick 15-minute break and just give him a shout out real quick. And I'm going to actually do something here. I'm going to switch over to another screen real quick. Give me just a second here. Give me just 5 minutes, or just give me like 4 or 5 minutes. I gotta send a link out to Volwiz, make sure he's all set up for what he needs to come on the stream. Coming into a new low in Tesla right now. Just be careful in here. You're seeing a little bit of a rug pull go on. You can see that yellow bar on Bookmap. Just want to make sure you don't throw this over here. Like this green bar here is slowly turning into some very light. Just be careful in here. VWAP sits down below at 402.99. Do not want this breaking here. No buy orders down below this block here. 407.5 right in here. There should be some buyers stepping in here. Or not should be. There are. If you look on the order book on the right hand side of the book map right there are buyers here. But if this breaks right here, there's nothing below. Oh yeah, baby! Just got off the phone with the Volwiz. Just got off the phone. And he's gonna be here at 1:30. We want to make sure we have enough time, or just the right amount of time to talk before the presser. And we were just chatting about his thoughts on the market today. Very interesting. So we'll see how that plays out into the rate decision. Very interesting take too. I like this take. I'm not going to say anything about what his take is. It's not going to really impact right now what's going on in the market. I think it'll be early enough for you to listen to what he has to say about it. So 1:30 this afternoon, you have Volwiz in the house. I was just talking to Joe Donut out there. I was going to bring him on, and he's waxing poetically right now, but he doesn't know if he wants to go on and wax poetically with everybody. I love listening to him talk. Well, here we go right now. We're going to see a move here in just a moment. We're going to have a break here. Yeah, if you don't already follow him, his name is @VolatilityWiz. VOLATILITY Wiz. He's a part of that. Jedi Marcus crew. There's a whole bunch of those guys out there. I think there's a core group of like 5 to 10 of them. These are all market professionals. These are real traders. These are people that make their money trading. They don't make their money by selling subscriptions to you. They don't make their money from collecting fees. They make their living by trading. So you're going to get one of these guys in here today. He's going to give you some insight. You can't get this stuff. You can't go and you pay for these guys to sit in a room with these guys, hear them talk. They're a dying breed. Some of these guys. I mean, I'm telling you. The other night. I had been drinking, and I was reading an article about. I'll post this on FinTwit right now. I was reading an article the other night. Now, of course, I was with some friends, and I was I was upset because here, I'll look it up right now and post it on FinTwit. And what we're witnessing right now is especially COVID, right? Was kind of the death nail for these real market participants. These are professional traders, and you're not seeing that anymore, right? Everything has gone into in the office or computers. So it's a real shame, and you see some of these guys are dying. You're not seeing people replace them, and so it's a change. So I just posted a link to an old article. I think this was from 2019 or 2020, but this is what I was reading the other day, and getting insights from these traders. We're not going to have that one day. You're going to see these people age out, and you're not going to have a new generation of these people that can look at charts and just boom, they know exactly where we're going. They have recall memories like a computer. I mean, these guys know what's up in the background going on in the market. And so when you have these guys, when you can pick these guys' brains, when you can ask these guys questions, or you can just follow them. Even a lot of these guys I don't even ask questions of. I just follow these guys and try to pick up nuances that they post. They just post this stuff right on FinTwit, and these are the guys that used to be in the old school message boards on Yahoo. These are the guys. I don't know if it's these guys or not, but some of these guys were in the old school Wall Street bets when there was nobody there, and they had their own little quiet subreddit on Reddit years ago. And so I don't know. This is going to get lost for retail traders, and it's a powerful tool that retail traders have. Yeah, some of you guys know who he is. Some of you guys have a high market awareness, and you know exactly who these people are. There's a core group of them. Yeah, I got nothing but respect for these guys. These are these are the guys that I look up to. If you talk about like accessible traders that you look up to, this is one of them. I don't know if it's really. I think it's more not. It's not chart reading. It's that they understand flow in and out of the market. They understand pivot points and highs and lows, previous time frames. They understand market events. These guys ate shit and bled this stuff, right? In pits for decades. You know, most of their professional lives. These guys all die young from stress. When you hear some of the stories from some of these guys, or there's a if you read that story that I posted, there's like a historical community now trying to keep this stuff alive, and so the age of algorithms coming into play now. All the trading done by algorithms and computers. Yeah, it's just all changed. It's overwhelming when you read this stuff, and then you go down the rabbit holes about these guys. Someone just said trading isn't as fun if you can't throw down a big bet on whether Jim the intern can eat 20 hot dogs by the end of trading day or not. Yeah. Hey, buddy, how you doing? Come here, handsome. Yeah, I'll you know the I was having a conversation the other day with a friend about the chat GPT or whatever, and yeah, there's big banks are bragging about their algorithms, and I'm like, man, like you release one of these. You release one of these algos out in the wild, you let retail traders grab it around the world, and that net of input will challenge any bank on its own with the smartest people, believe it or not. Once that stuff's released, there's a risk to our markets crashing. Believe it, wild swings. Just imagine if you got algos out of the hand, the AI type algos out of the hands of banks, actual artificial intelligence. Well, it's not intelligent yet, but trying to make a move higher to 405.79. 410 or 4100 on ES. I think I'm on the wrong contract. I want to see if I can switch contracts on this. Yeah, Val does drop fire in the middle of the night. So that's Jedi Marcus had some. I think it was Horse Lover Fat and friends. Did a white paper on Jedi Marcus trades the 5-minute chart on the 20. I think it's the exponential moving average on the 20 EMA on the 5-minute chart. Do I have that right? EMA. What do I think about it? I think it's a good trading plan. I think it's always down to what works for you. What tools works for you? I mean, for me, I'm always jumping around on screeners between HYG and junk bonds, VIX, Dixie. Then at some point during the day, I'll jump around the market on different sectors, see what XLF's doing, see what XLU is doing, XLP, XLY. I'll check all those at the same time and try to anticipate what's happening. I'll look for divergences on HYG, of course, to the SPY if it's going down or up. Check NDX. If I'm trying to enter a position, and then if you're running that with trading VWAP, or if you're running that trading that with 20 EMA or something, that all makes sense. And you're in and you're out, right? I like the trade too because in the white paper, they explain that if you go above, let's say you're long selling puts or long calls, and the trade goes against you, you take the other side of the trade until it comes back up. So they explain taking both sides of the trade in the paper. I like the paper, and I like Jedi Marcus. If you don't follow him, his name is, I think it's JEDI US 77, and he's on Twitter. If you don't follow him, don't harass those guys or anything. Just follow along, follow the paper trail. They write a book. If you look at Jedi Marcus specifically, writes a book, and I don't know if it's sometimes he shows his journal notes and stuff, but he'll leave breadcrumbs along the way of his trading journey, and if you follow long enough, you start to pick him up. So we'll have him on at 1:30 this afternoon. We update people on Twitter as well. Just a second here. Just a second here. Just cranking higher now. Just pure melt up to right now. Breaking through this previous high right here. Just smashing and bashing higher right now. Take a look at the VIX real quick here. I'll check it out on a different screen. Hold on here. Give me a second. Some wonkiness going on over here. Taking a quick look around the market here. NASDAQ just trying to blast higher here. Couldn't believe how many calls were bought yesterday. I was shocked at how many calls were bought yesterday. Just strength here on HYG right now. Looking at HYG in the side here. My S-Dow hedge is getting hammered right now. I still have a little bit of S-Dow on. XLE coming back. Let's look at oil real quick. USO. USO is just pumping right now. CL baby. Huge bottom buy at 62, almost to the strike. 61.82. Nailed that almost perfect. What else we got going on here? BNO slapping that. Nice. Oil looks great right now. Energy looks great right now. Boyle bloodbathing. GME's ripping higher off a big bottom. Should be coming into some sort of resistance here soon. If GME starts blasting from here, they're coiling right now. Some targets above 2186, 2202, 2240, but this is a place where they like to sell it too, so be careful of GME right now. Look at Tesla. It's just sitting down there. Tesla with the cone of shame, looking to turn things around right now. Someone's buying, though, Tesla right now. Let's look at Tesla real quick. What's going on with Tesla down here? 4 million, 5 million, 6 million. Cone of shame down here for Tesla. This is just the cone of shame down here. Almost a pinstrike down at 155.51. It was 155.88. See if there'll be a reversal here now on Tesla. Some targets above 163.40, 163.19. Yeah, I didn't change levels today. Right there, see what happens. Can't get this stuff to do. This trading app sucks. Point of control is way up here. Damn. Ooh. Gotta put an S4 down there. Large Tesla shareholder today saying he was going to buy Tesla no matter what this morning. Snap that back into. Just be aware of this as we're coming up here. Or we break out of this. You're going to be looking for, so if you're a bull out there, just be conscious of this up here, right? We always talk about this, right? Make the move up, consolidation, looking for a move higher, consolidate, and then you get that blast off. You don't take this trade until we're above here. You don't want to be getting caught in here because this is on this nice bull flag right here, right? The catch in here. Once we can start coming up here, right? The catch in here and drop right back down. Let's be conscious of this. Start bloodbathing it down below. Be aware of previous days, okay? So you can see that as we're coming up here right now. Top of the key, right? Be aware of previous days. Start moving up here. You start seeing bears wanting to come in and take a position. Big moves on Tesla right now. Tesla's just pumping right now. You can't be careful up here. They got some IV jacked up on the put and call side of this market today. I don't know why you'd ever want. I love buying zero dates at like 20 cents, 30 cents. They got they got 30 delta calls at what? How much? $2, $3. Try to get you guys to buy 30-cent calls with me. Guys are all about buying $3 calls. I always love how that is. Guys are like 30-cent calls. Fuck no. Give me some of those $3 zero dates. I'll load them up. And they really are trapping you right now. I'm loading everybody up on board and all this expensive stuff. Dealers come out. Thank you for playing. Pull back all that money out of the put and call side. Reprice everything. And you're left bag holding. It's insane. I'm watching it right now on the options chain. I think it's insane. I think it's insane. Absolutely insane. Trying to catch a leg right here. Looks like it's a little bit lower. Leave this like right here now. They're trying to turn this into some support here. Trying to turn this green. See if they can do it. We'll give them the benefit of the doubt right now. I'll give them the benefit of the doubt. We're way far off on VWAP down here. Just waiting to drop it. Yeah, it's always like these days where you're like, yeah, man, we're going up, baby. It's awesome. And then what do? Right before the event, they just slam it down. You're caught holding your balls. Not always, but, it's like stuff like this where I'm like, I have no business in this stuff. No business. I don't want to get trapped by anybody. $404.98 coming to the top of this key we showed you just a few minutes ago. Yeah, so for me, I'm usually buying oversold, selling overbought, and then, you look for the retracement for a pump off 68 or whatever, and then maybe you trade that. Like the super oversold, that's where most of my trades come in there for the money make, and then the degen trades. Yeah, I want to be buying zero dates at pennies, not pennies, but 20, 30 cents, 33 cents. Nice 30 delta. That's just we're just bloodbathing it. Grab some calls, grab some puts on the other side. And I like some arbitrage stuff into the close. Not as much as I used to. I used to like to hold a lot of stuff overnight, but I don't like hedging in the overnights. It's not as conducive as it used to be. Again, we have not a lot of money in the market right now, so most of those trades have gone away. Whenever I see stuff like this with zero dates, I'm like, no way. Yeah, so you're going to get classes from me coming up. The one cool part is you're going to see the market get real quiet after this weekend, right? So next week we'll start doing classes. You'll get emails from me. I'm going to start releasing classes, all open to the public, all free. Nothing behind a paywall. You guys aren't getting none of that from me. So you'll start getting them coming up the next couple weeks. You'll start seeing me post them. And then we're going to do a couple Zoom calls or private live streams. If you haven't signed up yet, sign up CaptainJimJames.com. I don't send you emails every week. You don't get any like bullshit like emails from me trying to sell you some shit. We'll do some unlisted classes, 100, 200 people in a room, and we'll go over how do I make my money, and safely how to place trades, safe trades. And then I was talking to Joe about it the other day, and I was like, I have to start at square one. Like, what is a share? What is a stock? What's a publicly traded company? and make short videos and splice them all together. So we'll go through all that, and then you can just click through whatever you want, and then we'll lead right up to don't go chasing scams. If you're trading degen trades, it should be like the cream off of what you're making in this market. Don't overcomplicate your trading. Be a dumb trader. Separate. I mean, there's so many things. Yeah, if you sign up, it's a free sign up. There's no paywall or none of that shit. And you just sign up. I'll send you an email, let you know when we're doing that stuff. It should be coming there. You should see me doing that stuff in the next couple weeks because it's going to get nice and slow. Nice, easy time to do it. All this vol will kick off, should kick off. I mean, I don't know if you're a bull or a bear out there. At least the implied vol coming up is a little bit lower heading into, currently it's heading into the end of the year, looks quiet. We've had years where it hasn't been quiet. We've had at least a few. We've shown you what those years where we haven't had quiet, right? Where they have sold. Push above, push above. Push here, push here. Next level's down here. Way down here. It's a little bit down in here. I guess you could extend this lower. You could say this is really here. Truth is, it's down here. And even then, it's small. I don't know if this would hold up, though, if you start selling. This is all I'm waiting for. I'll tell you exactly what I'm waiting for. I think I posted this in the weekly brief. Is that I'm just looking for all of you to get trapped up here so you can sell me your expensive calls for dirt cheap in a capitulation moment. Your $3 calls, I'll buy them from you for 30 cents. You'll capitulate. I'm such a cheap fuck. I want to buy your $3 calls for like 30 cents. And then run it up to like $2.97 or $2.70. And you'll be crying. And they'll never come back to $3. That's what I want to do. My day off yesterday was recovery. On Monday night I was like, I'm going to bed, everything's fine. And I had some old friends that were like, let's start drinking. So I started drinking. And then when I woke up on Tuesday morning, and I'm about to get the live stream started, and I'm like, I'm just hungover, I'm fine. And then I'm like, I'm not fine. I'm like, I can't be on a live stream. No way. I'm like, no way. I need a like, you know, when you start dating a girl or something, you have a stunt cock for yourself. Like some girl trying to meet you or something, you push a friend on her. I need a stunt double for live streaming when I've gone off with friends and partied all night long. Oh yeah, I could have come on. I'm like, I'm not coming on. My wife was like, said she'd even like run a stream where I'm not here, but you can have the Bookmap up and the levels up and all that kind of stuff. And I got to teach her how to do that stuff for me if that ever happens again. But, which of course it will. It's the holidays. You know, you get friends that show up out of nowhere and they're like, hey buddy, what's going on? I haven't seen you in a year. Let's party. It's the holidays. It's what it is. Oh, there's the bloodbath right there. Bear's coming in, selling that. Look at this nice liquidity break in the SPY. Just blooding it down right now. Bear's been waiting all day long to get that roll, man. They're just up here waiting. They can smell it. And so I'm like, I'm not going on there. I'm like, I'm not doing this. I'm like, no way. Just trapping them. Look at it. Terrible. Nice little quick red bar in here. Big old red ball. Just stopping out longs in here. Yeah, so that's what it was on a Tuesday morning. I'm just like, I'm not doing this. Well, I had been up all weekend too. I saw this past weekend. I have to work on a bunch of more like behind the scenes. I'm doing a bunch of work on an algorithm, predictive algorithm, and then I'm working with my daughter. She wants to be in finance, and she wants to get a math degree or a finance degree. Accessible data for retail traders on some kind of a website that's free, and you're not paying fees to people to get that information. And to grow that into something, there's this guy that what he did was he designed a website that will do your taxes for you. And you just input your stuff and tells you what you're gonna pay for tax, like some just tax stuff for people to have access to that they'd normally pay a company to do for them. And I was like, if you do something like this, and you go down the rabbit holes of like black skulls, all this kind of stuff, that all this like what are the Greeks, first, third, second, third order Greeks? What do they mean? So we're going down all these rabbit holes right now with my daughter, and so she's in school all day long, and then I'm live streaming. I need to eat dinner and sit with them, and then of course I'm like, let's sit down for a few hours at nighttime. So not a lot of time, of course. And then of course I have a friend come around and being like, let's drink some Fernet Branca. Let's finish the night with a bottle of Fernet Branca. And I'm like, what? Of course I'm doing it. A little bit of blood right now here in the market. Trying to catch that reversal, right? See that, right? Trying to catch that reversal here. Start building it and take it down to the next level over here. See these bears coming out, right? Bears looking for that setup, right? Break this consolidation down a little bit. Send it down. Come back up for a nice fat rejection. Get through this level and back down to VWAP over here. See if the bears can do it. I'll have to switch to the color red for the bears. See if they can get that bloodbath rolling. Trap some of these bulls in. Bulls think they're getting a free ride into the end of the day. Trying to get underneath these moving averages here. Trying to trap them in. Trying to get some bulls. Trying to buy up in here. Start sending it down a little bit, right? Come through some of this volatility. Slap it down in here. Get back to the start of the day. Right, take these bulls right back over here. Bottom of the key over here. See that key up there? These bears want it so bad they can taste it. See that? They're like, nah, brother. You ain't going up there. We're coming down here. Coming back down here is what we're doing. Bears are all hot and sweaty, getting all lubed up. The bulls thinking they're going to be buying this down here and taking it to the top of the key like a slam dunk. Take a look at a 5-minute chart again real quick, just to give you guys some reference here. See this big old bear flag up here. Bears like, yeah, I saw yesterday, they're like, this is full rejection up here. You have a 120-point move up here, and you don't think you stopped somebody out above here? You don't think that there was someone got hurt up here? I know they're saying like bulls got hurt up here, but someone had some stops up here. Big money. 120-point move up, guaranteed. Guaranteed a big player got hurt up here. Triggered some stops, and we just started selling. But this is a big move. I mean, it's a huge move up there. You're gonna trigger some sells. 414.10. Right? Then you got people buying dips over here yesterday, probably. Well, I'm away for one day, and you guys are probably all just loading up on 420s, 415s. I looked at the CBOE data last night, and you should have seen the volume of calls that came in up here. So now you got bulls in here. They're just trying to make some money back, right? Trying to unfuck themselves today. Meanwhile, you got the bears over here. Bears like, oh hell no, Cap. We're just waiting for him to come up here so we can sell it down on him. Some intraday trade, Cap. That's all it is, Cap. Just bring it right back in here for the decision. See all that nastiness up there. You want to look at some implied moves for the day, some implied moves for the day, or at least how the market's priced. It's a big one right here. So that first move, if you're looking for a first move today, up or down, doesn't matter. Be looking to target somewhere in here. If you get a big Fed decision for the bulls, something that's perceived by the market, even on a smaller time frame, initial time frame. You know, this is a time in here too. You make it this nice push up higher. Well, we'll talk about the push lower too, because the implied move is actually down. Believe it or not, it's a big gap down here. And talk about that if you're in a position. It's actually down farther down. It's like down here, believe it or not. But if you trade this today, right? The thing you want to know is the closer you are in the money, the better off you are, because you might get like your initial move down or up. You might not actually get here or here. You're going to find some resistance up in here in this initial move up, okay? And they may reprice twice today. They'll reprice first on hold on a second here. I want to draw one more in here. Got a little gap to fill down below here. As an example, let's say you got yourself some 403Ps, right? Or not 403Ps. Let's say you're like, I'm going to buy these way outside the money puts down here, right at 392 or something. You might see a blast off and just a miss before you get there. Does that make sense? Then you'll get the rest of it will come down here, okay? Same thing on the upside here. You've got sellers ready to sell above. So that initial move, if you have an initial move up here, you want to take profit and reposition for a bounce, right, to go higher. Does that make sense? And you guys have been with some of you guys are in here with me, have been with me through these events and how we trade them as we go up or down. And you know that you want to be like there's like one repricing, then there's a second repricing after the presser, and you want to make sure that you're tactical in trading these levels, and that you're not so far out. Sometimes you'll be out of the money and it won't go up high enough for you to actually capture that trade on too far outside of the money call, and then they come back down. They actually burn your calls, and you can't even you just have to buy new ones. You cut them loose and buy some more. So just be careful as we trade this today. Here's your Christmas colors for all your holiday rally bulls. Starting to trade lower now, testing lower lows. Lower lows. Bears trying to come underneath over here, underneath these moving averages. Right, get underneath moving average 1, 2, trap some bulls, start heading lower. Big part of this move is right here. Oh yeah, baby. Here come the bears. Bulls saying, fuck no. Look for a place for the truly, there's a gap down below here. The gap down here. Right off the bell. It's probably where the smart money is down here. You can write smart money down here. See that down there? So what smart money is down here. Smart money is looking for a trade to pick this back up. Some levels down here, some previous lows. We'll throw those in there for you. We'll look back if you want. I mean, you start seeing slam down here, slam down here. Give the bears some stuff to look at. You can see it right down here, this S2. See that support down in here. You don't want to see this break. So your initial move would come down, right? Blast through, blast through, blast through. This would be like the presser, hopefully. You break this right here, and we're going down 38.50, 38.20. And see this right here. Just being aware of where we are. I don't know what the fuck this thing is right here. There's like an artifact inside the screen. I don't know why it's artifacting today. See that right down there? So we can switch over real quick. You can see 412.50 has got big sell orders way up high. That's actually not that high. There's you know what? I'm gonna give bulls something here today. I'm gonna give bulls. I think that he said something to me about this earlier too. I'm gonna give bulls some kind of credit here. There was a lot of sellers taken out yesterday. Above, there's not a lot stopping. Like the resistance that we had higher yesterday that was smashed with a hammer. A lot of that looks like it's gone today. That's interesting to see right here. At least on the book, it doesn't look like there's much or many sellers above. That can change. But that's interesting to see right there. There's not that many sellers way up high. If we were to squeeze higher, I don't think there's much stopping a pretty big rip. So that's interesting to see. You guys seeing that above on your end on the book, in the order book? There's not much stopping us going up today. Yeah, I canceled Floago. It was impacting my bias. I wasn't happy at all. I canceled Spot Gamma because I felt as though they were missing market. They were missing market turns, and then they weren't getting back to you close enough to say, "Hey, market's turned." And I'm like, "Oh man, I can't have any of that." I was losing some big money on trades that way. If Spot Gamma could be kick ass if they just had a way to get in touch with their followers and if they had a way to and there's no because I think Spot Gamma is awesome. I think they're great. Maybe they have changed. I don't know. I haven't used them in a while. But like you want a way for them to say, "Hey, look, the market's rolling over, the market's being picked up," and I always felt like at these crucial moments, for me, it wasn't working. Might work for you. Wasn't working for me. Yeah, full pivot. So yeah, they're being backed into a corner. They're going to have to. There's this like whole thing where they have to pivot at some point. So the longer they don't pivot, the more it'll become even a bigger shock. So it's like there's this whole argument about do they full pivot? Do they rate shock? Or if they're gonna, well, then it opens the next question. If they're gonna shock by full pivot, why not just slam us with 75 basis points? Because both will have a shock to the system. Yeah, we've got Volatility Wiz is showing up here at 130. He's going to go through the market with us. He's going to hold our hands. This is a big volatility event. It's not the biggest, but it's big for us for the year. We're pretty much deciding direction of the market for at least a quarter. But December, this is a yearly OPEX as well, right? December is a yearly OPEX. We're trying to get some direction for the rest of 2024, believe it or not, in December. And that leads into Friday. So this whole week is like the main event usually for the year. And we got yearly OPEX coming up. We've got quarterly OPEX coming up. We've got massive data coming out tomorrow. We've got a Fed rate decision today. Hey, thanks. I appreciate it. On the back end of this, I've gone through it in other live streams, the explanation behind why they're backed into a corner, why the Fed is lying to you, and what the Fed's real role is in all of this stuff in previous live streams. Some of you guys have heard it ad nauseum at this point. I'm not going to go through it today with you. I'm going to bring in an expert with you on this being a specific volatility-driven event and what it means for you positioning-wise. And then people will say that they're not gonna shock us today, but they've done that to us before. The Fed is famous for shocking. These bears coming in here, right? Nice little send it down one more time, get underneath the moving averages. Looking to send it down at least to VWAP in here if they can. Bulls are like, I'm just going to keep buying this for one more banger right up here just so I can slap the top of the key. Everyone's trading with, I mean, you get 0-8s that are price. I'm going to look at the next expiries here. Can't even imagine what the 15th is priced at. It's 12:12. I'm going to take a quick break. I'm gonna every time I take a break, something happens. So I'm gonna take a break and I'm gonna refill in some water here. Take a piss break so I don't have to get away from you guys. We've got at Volatility Wiz coming up at 1:30 p.m. He's gonna walk you through what to expect in terms of volatility. I think you're gonna be surprised what he has to say. I haven't said what he's gonna have to say. I'm not gonna, but I think you're gonna be surprised. And it's gonna be a great viewpoint. I haven't heard this viewpoint at all anywhere or that I've seen on. There might be some people with this viewpoint, but I like his viewpoint. What to expect today, and we'll try to get him to talk about the news-driven events, the economic calendar news-driven events that are coming out tomorrow, and then possibly what to expect into OPEX. We'll talk about the presser. And we're going to talk about implied volatility crush, and how this impacts you and what you're holding right now into the weekend. What to expect after? Are you going to possibly get a holiday rally or not? All these things. Get your pens and papers out, and get your crayons out if you're a Marine. Make sure you get the ones that don't roll around off the table, the triangle crayons. And then you just scratch out what he's saying to you. Find out who this trap is for right now. Yeah, there's ways to trade this. I mean, you could just buy. I mean, you can just chase the trade. You can buy a straddle on the market and chase both sides with like 1 to 3 month options in the money stuff. That's like 1 to 3 months out. Chase both sides. You hold one side, or chase whichever way we go. Hold the 3 month on the other side to hopefully come back, and close whatever gap was left behind. An easy way to deal with the premium that's built into this move also is to do it with spreads, express it with spreads, so that you don't have to worry about the vol crush. If there is vol crush, there might be a vol spike. Even from here, if they try to bloodbath us, we've had years we have bloodbath in December. They're very rare, but when they do happen, they're real ugly. They get nasty. I think the last one we sold off into Christmas or something, or I think it was like Christmas Eve. We just bloodbath the entire market. Not a fun experience. Not a fun experience at all. I'm a bull, so I don't know if you know that out there, but I trade as a bull typically. I'll take the opposite side of the trade. I follow the trade wherever it goes, but my stance is as a bull. Yeah. Break out your crayons. Yeah, I saw my algorithms have a couple different scenarios. One of the scenarios is we trade it sideways and down. You'll see risky bonds roll over, and they're at a resistance point right now, right? You'll see the rise of TLT, and they'll just take 2 or 3 opportunities in the next year to dump this market. The implication would be that they would raise rates, they would force unemployment to rise, and you'd wait for that capitulation move, right? That 45 in the VIX that everybody wants to see. Now there's some other problems though. If you look back historically on the market, if you look back historically at the implication that inflation is going to rapidly decrease this year, that the Fed always pivots right around now. Right now, actually, is when the Fed actually pivots unannounced. Now, without having unemployment high, right, it's showing that we're not truly at a bottom. So from my posit to you is, can they create a shock to like trigger that downward move? You'll get some news saying that we're getting higher unemployment figures. We start to head lower sooner, and the depth of that move down, it's not so deep. It's 3,100. It's not 2,400, 2,600. It's not 1,600. But the longer we do trade it sideways, the longer the Fed doesn't raise rates drastically, it opens the door down the road to much lower lows. So I mean, there's some mechanics in the background, and that they're a hammer on a nail. I see guys out there. Yet this past couple days, I'm seeing people trying to dissect the CPI number, and I'm like, what are they doing? This has nothing to do with the market. This has nothing to fucking do with the market. The market's like a hammer and a nail, you know. And the only bottom as a trader and as an investor, are you looking for a bottom for a bull run? It's always a high unemployment rate, inflation peaking. Fed's cut rates, same time you'll see the capitulation move. It's like a golden magic thing. It's like a golden magic thing. Every time you see it happen, you're like, bam, there it goes. So until then, they can drag this out sideways as long as they want, but eventually it's gonna get ugly. You start breaking real shit, right? You start doing real damage. And not the kind you want to see on Main Street. And with modern monetary theory, they're trying to engineer this to not happen. They're trying to engineer this. If they engineer it down to 3,100, everybody's happy. The longer they drag this out, the more recession comes into play. Things get real nasty. These god dang bulls keep trying to buy this dip, man. Look at these bulls. These bulls. These god dang dealers. You guys, I'll show you this. You guys, all right, I'll give you guys 5 minutes on this, okay? I'll make it really simple for you, okay? I'll go through it real quick with you if I can. Hold on a second here. Show you guys some instances. Okay, we'll keep it simple for the dumb trader out there. If you're not I guess if you don't have a lot going on, I've been there. I've run the wheel. Went down the rabbit hole with with condors and with flies. Just too tired for that stuff anymore. I like to keep shit simple. The simpler the better. The older that I get, the simpler I want to keep shit. So here, I'll set this up in the background for you. You know, this doesn't mean that you should take this. This is not financial advice in any way, shape, or form. I don't want you to take this as financial advice. You guys want to go through this real quick? I can. I'll go through this briefly. So I'll bring up SPX here. Give me just a second here. Bring up SPX. Got a nice clean chart here for you. Nice and clean, sexy. Federal funds rate. Oh, hold on. Sorry about that. Can I bring this into a different window or something, right? Hold on here. Do a comparison. There we go. Effective federal funds rate. Bring that one up. Nope. Hold on. Effective new pane. There we go. We'll look at the inflation rate in new pane. It's a big one. We'll just look at these two right here. Yeah, so you got, I want you to, here. Let's just look at this, okay? You know, you got people arguing about inflation coming down, okay? But what kind of inflation numbers and CPI are they looking for? PPI, doesn't matter. You got the Fed funds rate, right? That's a nominal difference. So this means more at 5% than 20% did in the 1970s, right? We'll look at a weekly. You can see the curl over here, right? And you can see moments in the past here where you see this roll right here, right? See that inflation roll right here? And you see where the Fed cut the rates? Bam. Right? I can show you other instances of this in the past where they've done this, right? You can see it right here, the roll. Start rolling over. And you can see here, the Fed cuts the rates back here. Right? And you can see the roll in inflation back here. You can see all kinds of instances of this in the past. So I'm going to keep this part simple, okay? I'll show you this right now, okay? And then I'll bring up unemployment. Nope, hold on. Let me get rid of that. I'm going to show you unemployment here, okay? There we go, new pane. And I want you to see this. This is signaling bottoms in our market. See the rise here, right, of unemployment, right? The rise of unemployment, right? You can see the rise of unemployment to bottom in our market, right? Leveling off here. Rise in unemployment. Big one. Unemployment. Always unemployment. Rise in unemployment. You see a bottom in the market, right? See this right here, unemployment, right? Rise in unemployment right here, right? Fed cuts the rates. Inflation's going down. Rise in unemployment, right? It's a big one, right? You remember this is, right, 2000. Same thing over here. You see unemployment rising, right? I want you to see this stuff's important. See inflation coming down. You see the Fed cuts rates, right? So you're not seeing that right now, are you? You're seeing the rollover of inflation. You're seeing the Fed fund rates rising, and you're not seeing a reaction down here, right, with unemployment. So you really want to, in a perfect world, you want to see this coming up. We'd be at a bottom right now. Does that make sense? And you're not getting this right now in the market. And so because you're not getting this in the market right now, we have to trigger this at some point. You have to start to see this number come higher. And you're not seeing that. So my point to you, if you're a bull out there, is does this match up to a real bottom? And it's not. It's not. So So what happens is, do we play this out into 2024 and have to watch this rate slowly go up? Do we shock here so that we get an actual jump start? Sorry, I'm being so fast that, but at least a jump start, right, for the Fed to actually cut rates. So you'll see this curling over, you'll see this coming up. And do you understand what I'm saying about this? So when people are out there talking about the fucking yield, sorry for swearing, but the yield curve and all the other nonsense out there, it's not that I guarantee you pull up a yield curve and you put it towards declines historically, it doesn't always match up to declines. So be careful. If as a trader, be careful. As an investor, be careful about all this yield curve shit. It means nothing to you. What really means something to you, if you want to buy a bottom in this market, is watching this happen. You really want to watch this because you see this, right? You see this, and then you see the Fed cut rates that probably coincide with a bottom in the market. This is the dumb trader way of doing things. I don't care about what they're selling you and the fees that they're getting. If you're a trader, an investor, this is the dumb way for you to figure out, are we at an actual bottom? And we're not seeing that right now with the unemployment rate. You guys tracking what I'm saying out there? It's a very simple way for you. You can pause this video, go back, look at how you put those charts up. And you want to go back and check that every month, every 2 months. I don't care if the market's going up from now into the end of the year. And what's crazy is the market can go up here, right? Instead of going so down, right? It can go up actually here for the next year, and they can crash it in a year from now when an unemployment rate comes up. So you get a good market, right? You'd literally have unemployment start coming up, right? And then they would crash it down to like 3,100, 3,200. Now, if they don't do that, right? If the Fed's not boxed into a corner, what happens? We trade sideways and down into next year, and you start seeing real deep lows and real deep damage done to the economy and the stock market. You guys, it's very simple and direct. So you could literally like stop listening to anyone on FinTwit. Now, of course, this might not play out in the next month or 2 months or 3 months, but I promise you, if you're a bull out there, if you're a bear out there, over a time frame of 1 year, 2 years, 3 years from now, you're looking for that for a bottom. Very simple, very straightforward. As a matter of fact, I got this from In the Money from Adam, I think Mike, I think his name is, and he put it to words that I tried to explain to people that they weren't listening to me, and I was like, all right, whatever. I was like, I got to get some way to figure out how to explain this to people, and sure enough, he did a very good job of it. It's a very simple thing. Put up yields over. I can show you a yield chart where it doesn't match up to to market decline and death. So the yields aren't going to do it for you as a trader, as an investor. You need simple ways, right? You look towards the bond market to find out if there's internal mechanical problems in the market. Why is the market declining as we're raising rates when usually the market should be going up? Believe it or not, if the Fed's got people believing that they're working on the market, right, on dropping inflation, the market should still go up. But there's internal mechanical problems within the market right now, or it was this year in this decline. And they run all this bullshit by you, saying that the market's doing the job for the Fed. That's a crock of shit. It's all a crock of shit, I promise you. Probably shouldn't be talking about this stuff on a live stream, but whatever. So that's what you're looking for if you're a bull. I mean, a real bull, like even if you're a bear, like if you're a bull, you want to buy a bottom in a market in safety, that's what you're looking for right there. That's time immemorial since the beginning of our stock market, the beginning, all through all of it. And what's the other thing you're looking for, right? You're looking for, these aren't hard concepts to grasp, right? On that same note, what I just talked to you about, right? I'm going to delete all this stuff. Right? So all the nonsense that you hear out there means nothing, right? I mean, it means something. You got to sell somebody that you're smart. You have to sell somebody. People have to sell like an image, right? They have to sell it they're smart. Then you find out in the background that they're just pumping bullshit to you and collecting fees. And all along the way, they were buying the zero dates, right? The zero date, in the background, that's what they were doing. So it's you have to sell an image, especially if you're a smart person in real life. If you're an intelligent person, you get a great degree, and you're a doctor, you're an engineer. You want to hear someone that sounds like they know what they're talking about. You keep going down that rabbit hole and you keep losing money, I promise you'll dumb stuff down. You'll get very dumb in your trading. Okay, so this is the weekly moving average. It's a big fat red line, right? On your own, just go and look at it. On your own, you'll see we interact with it at bottoms. And once we slip under, we stay under, right? We start slipping under it. Time passes, right? You spend enough time down here, you will trade deep below it. Historically, whenever we trade below it, whenever you start to see an extension of a down market, right? So we were talking about the Fed today, right? Does the Fed want to stretch this out into next year? Is the Fed in a corner where they have to cut rates, right? So what are they implying? They're implying to you that, or what's being implied here is that the Fed knows that if they spend enough time down here trying to trade this market sideways, we're going to end up interacting once again with a weekly moving average, a 200 weekly moving average, right over the course of this year. Here, give me a second here. We know historically, every single time, that if we spend enough time down here, right? Hang tight here. Say this starts coming up and we come down and we trade this market sideways. And let's say we go, hey, we're gonna stick with our plan and we're gonna keep doing rates, slow increments, right? And we start spending time down here. Whenever we've done that, we start making some pretty big lows down here. Start looking towards, numbers that are way, 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 way lower. Does that make sense? You'll make attacks on this. You'll make attacks on this weekly moving average, and once you're underneath it, right, between now and in January of next year, you're going to end up getting one of these moves, and these are deep moves. When you start making these deep plunges down here, this is real damage that gets done. So the Fed has to think about that when they come into this meeting today. They have to think about, well, do we just try to jumpstart it here and get us moving? Does that make sense? Or do we carry on sideways and slip underneath the weekly moving average? The more time they spend down there, so the time that they have to make this decision, the box is quickly coming in on them. Because what they can do is this. What they can say is, well, we'll try to work on getting the unemployment rate up. They're not going to want to tell you that. Get a quick jump start off this, trade this up, and then once unemployment gets high in 2024, they can dump the market to right here, maybe slightly below it, and they just keep moving on. That's called manipulating the market. This is where this is the attempt they will try to do. If the market, quote unquote, believes that they're doing something for inflation, right? They'll be selling you this idea so that they can just carry on in 2024. So I want you to be aware of all this. Very simple concepts. Very, very simple concepts. Why is the Fed boxed in? You could tell you right now why they're boxed in. I just showed it to you in like 5 minutes. It took 5 minutes to explain all this to you. 5 minutes. And these are huge moves. Like, do you need to have all of this trade? No. If you find out something different today, this trade down here is monster. You don't need to trade this today. If you find out today they're going to try to jumpstart this up, you got a huge trade above here. So that's what you're looking for today. You're just looking here to find out what this Fed says, what kind of bullshit they're trying to swing to you, trying to sell to you as a trader, as an investor. Does that make sense? And in the longer that they don't do it, right, they get boxed in more and more and more heading into springtime. They get boxed into this where they don't have a choice. You guys understand what I'm saying to you? Yeah, well, you guys got to understand, we're looking over a time frame of years here. So if you get your Santa rally, right? If you get funds off sides, everybody thinks they're going up, and they do one more quick throw over come beginning of the year, they can slam that WMA. You can slam that down in January and March. Even with a holiday rally, slam it down. You've got everybody long. You've got no shorts on the market. No one gets paid. They get their slam down. We rocket ship up for the next year. Meanwhile, you see destruction everywhere. Everybody's complaining, and then they dump that shit by next year. Probably, high probability. Now, I'm not saying it's going to happen. Okay, this is not financial advice at all. But I want you to realize that there are some simple ways for you to read the market, read the Fed, and figure out what the heck they're doing without having to get all complicated. Complicating. Because the complicating out there is I find it wild. It's like I don't know, when Dr. Evil tries to describe his father, right? He could like sell squirrel nuts to a chestnut to a squirrel or something. I don't know what that is, but trust me, 100%. I can show it to you all through history. Well, not trust me. This might not work, but I'm sure that the hammer and the nail that is the Fed and the Treasury Department, this is how they deal with stuff. So the Fed is lying to you. When I tell you on Twitter the Fed is lying to you, I assure you that they are lying to you, and I also assure you that they have to sell. They have to sell to the market that they're making progress. Right? There's like this whole thing they got to do to sell to you. They either have to sell to you that they're making progress, that they're not, and you have to believe it. The market has to believe it. That's why you look towards the bond market, because the bond market will tell you if they believe it or not. And if they do believe it, right, there's other ways for you to see if the bond market accepts that the Fed is working on these issues. And you could see that earlier this year that the bond market did not believe that the Fed was working on these issues. Did that work was that good? Was that a decent explanation or was that a horrible explanation? Let me know in the chat. Please like and subscribe these videos. Appreciate the support. If you feel like you're learning anything here, please consider donating to support the channel. This is a free sub. There's a donate button down inside of the description below. And if you're a poor trader, don't even think about supporting the channel. Just like and subscribe. Helps me along. I appreciate that. You guys got that rocket science there? Would that take 5 minutes, right? It's very simple. It's all you need to know. It's literally all you need to know. And so you're talking about coming into the end of the year, right? This is an important week for you if you're a new investor or a new trader, where you're going to sit back. A lot of the pros sit back and just watch what comes out. You listen to the Fed. You listen to Jerome Powell. You can see them already covering up, right? You see the little Fed chair presidents. They're all over the place. That's called cover your ass. So they're going to be out there throwing shit against the wall. You've seen that, right? The past month or two. They spread the shit around because they don't know what's going to happen. If they're all together in something, they know what's going to happen. They don't know what's going to happen right now. You're welcome. Thank you for being here today. I appreciate you guys being here with me today. So we're going to get someone we're going to get someone on stream here real shortly. At 1:30, we're going to have at Volatility Wiz in the house. This guy's a badass trader. Everybody knows him. Yeah, I'll tell you one thing about this guy, okay? You know, the people that trade all day long, they've got their tweet deck up and they have a big old TV and they got a bunch of people that they follow while they're trading. And they just let these guys post. He's one of those guys you keep on your dashboard. He's one of the guys that trades every day. This guy knows what he's doing. Volatility trader. One of the most volatile times of the year right now. I was just looking at some vol over the year too. Volatility has actually dropped this year, starting in June, July, and then this last bottom we just had. It was really ramping after the first, after the fourth or whatever, January 4th. We were ramping volatility down into the second to last bottom we had. His name's @VolatilityWiz. Follow that guy. Follow him late at night. He's a great follow at nighttime too. Comes out in the middle of the night and starts talking about all kinds of movies and stuff. It's a blast. Drops knowledge in the middle of the nighttime. Guy's great. Right on, right on. All right, we're gonna try to get some people in here. I'm gonna post on Twitter. Let people know that Volatility Wiz is gonna be here today, 1:30 this afternoon. I'm gonna take a quick break here, and I will be back with you. So the stream will still be on, and I'll be back in about just 5 minutes. I'm gonna take a bathroom break. I'm gonna get some water, and I'll be back with you guys in just a moment. Okay. Twitter handle is VOL was VOLIT. Let me try to do this. I've been up awake since crack of dawn this morning again. VOLATILITYWHIZ Volatility Wiz. I posted his handle on my, and if you go to my profile, just Google search Captain Jim James. You'll find my Twitter profile. I've got his link to his Twitter handle in my most recent post. So just click on that, follow him. Worth a follow, worth to keep on your radar. Him and his whole crew. There's like 10 of these guys that trade the market every day, and they're always they have these like just group chats publicly. I'm always surprised that nobody's following these guys as they talk to each other through the day. These guys are crazy. If you're a young trader and investor, you want to listen to this guy talk. Maybe like 15 minutes. I'm just going to freshen up here for the rest of this afternoon. Oh yeah, baby. Here comes some of that blood. Give me some of that blood. Please give us some blood. Give me some of that blood. I know there's traders out there right now that are like on their screens right now. Die, spy, die. Hey, what's going on, James? Just trying right here. I was just talking to someone and I said at any other given day of the week, you're like, who would be paying $3 for a put, $3 for a call on a 0 date? I can't believe people do this. I can't believe you'd be willing to pay this much money. This looks like the Christmas bonus for dealers. They're just like a vacuum cleaner, just sucking up all that premium. Just insane. Can't believe for a minute. I was just telling this guy, I was like, brace yourselves for the people on Twitter that are holding puts or calls. I don't care which one. For all the posts of why is the stock going down when my puts aren't printing. Why is the stock going up and my calls aren't printing? I can't I haven't even set up a trade yet for I'm chewing on some trades. I don't want to buy any of this shit. I just don't. I'm like, I don't want to buy this. I don't want to buy any. I don't want to buy I don't even want to buy like a strangle. Like I don't want to strangle it. I don't want to straddle it. I don't want anything to do with it. I hate buying expensive options. Can't, it's like a rule. And they're draining them too. I've been watching they've pinned I think 406s have now bled off a little bit, but everything's so expensive. I'm like I'm not sitting here trying to slam down $3,000 or $30,000 to have it drained off for a couple hours. I always like that. I like that just regular traders, like a regular day of the week, whatever normal news there is. Shit goes up and down. It's like 30 cents turns into $3. Yeah, selling calls and puts to all these people is the way to do it, without a doubt. Can't believe people are buying this shit. I want to buy like 100-pack of options for like dirt cheap. I don't want to buy 100-pack of options for $100,000, $200,000. Can't believe how much. Can't believe how juiced both sides of this are. I can't believe it. I'm just shocked. Like the whole options chain is just juiced. SPY option chain looks like Tesla option chain. Hot mess. Tesla with the bounce down below, fighting its way up. Just a heads up here. You guys watching HYG right now? It's just bloodbathing. Take heed to this, boys and girls. See that roll over here in HYG? You know, I don't like seeing stuff like this, right? Bond market's telling you risk off. Just heads up on this. This is HYG showing you some risk off right now. You see that right now? Risk off. TLT, risk off. Bond market's telling you to wrap it up. Bulls hiding out in XLU. Bond market's telling you no. JNK is kind of holding itself up a little bit, but HYG, man, telling you, Top of the key up here for HYG. It's XLE. Man. Be real careful. There's some risk coming off the market right now. Have divergences building up across the market. Dixie's looking for a bottom here too. Let's look at the VIX. You know, VIX is showing you the way right here too. Inverse head and shoulders in the VIX. 1, 2, 3. You better be well hedged if you're in this market right now. Be hedged. some risk being removed. Hey, Rice Boyfriend, how you doing? Dad, I'm scared. Divergence. Well, let's look. Let's see if can we compare on this. I think we can. Uh-oh. I don't know what just happened here. Guess it's not comparing today. Just heads up, there's a divergence in the bond market versus SPY here trying to recover. What do I think is going to happen? I think they're going to swing high, swing low, and murder everything. And today, that's what I think they do. I think they swing high, swing low, murder everything. Then you get J-Pow come out. And I think he might be dovish. I like the idea of 50 BPS. I just wasn't I'm on the train for 50 BPS. Maintain maybe a more dovish terminal rate. All in the language of his speech or his presser. Usually, though, or not always, but sometimes during his presser, they'll save the one, like the one reporter that asks the hard questions and tries to pin him down. And he'll get all bearish, hawkish, and you'll be just blasting up, and all of a sudden it'll just reverse because you didn't listen to the last 2 minutes of the 20-minute presser. You're like, shit, what's he saying right now? I always like to watch his pressers right to the end. Yeah, it's you get the release at 2, and then 2:30 he does the interviewing. I don't know. I think if you get the rocket ship, that they're going to try to make it so it reverses. What we have to do is watch the put structure after, and see if more puts come into the market in case we reverse off a rip higher. If we rip higher and you don't see puts placed like 1 to 3 months out, I guess as a bull, you'd be looking for that. You're looking to see if you see puts coming back into the market after we get a rip high, if it rips higher. I have this. I don't like how much options are costing right now. I really don't. I'll be honest with you. On both sides of the trade, I don't like it. I'll be 100% honest with you. I'm not a fan here. So I got some news keyed up for you. This is going to be the news release here. I'm going to put another one over here for 2:30 for the presser to start. Do you guys want to listen to you want to listen to J-Pow from or you want to listen to J-Pow from my end at 2:30 maybe? we'll have the news squawk talk about, try to interpret what the presser or the release is, the rate decision at 2. So we'll let the news squawk.
So shortly expecting the Fed reverse repo facility use.
So we'll do is at 1:30 here. It's coming up here soon. Next 15 minutes, what we'll do is we're going to have at Volatility Wiz come on. We'll let him do his thing. Just let him chat and talk. And then, you know what we'll do is we'll bring him on right now. You know what I'm going to do? I'm going to send him a new, give me a second here, okay? I'm going to mute this real quick, and I'm going to put him down in the bottom left-hand corner of this. Hang tight for a second here. Give me just a second here.
$97 counterparties take $2.193 trillion at the Fed reverse repo operation.
Give me just a second here. Got some stuff in the background. Yeah, are you guys all ready for the holidays? Your wife's boyfriend, you ready for the holidays? Winky, you guys all ready for the holidays? For long term is S&P bull run or bear rally? Always bear. I mean, always bull run. Stock market goes up on a long enough time frame. I know you guys don't like. See if I can. Give me a second here. Put something like that there. Hey, you guys are all ready for the holidays? See if we'll see 45 today in the VIX. Yeah, I've got a trip planned for Park City. Gonna go to, but that's in January. I'm going to Sundance. I'm gonna go hang out with all the movie stars and stuff. Go skiing in the daytime while everybody's watching movies. What's a white elephant basket? I like the idea. Well, I like just the word, just how it's. I don't even know what a white elephant basket is. E-Rock, are you out in Park City? Are you at the mouth of the can, aren't you? Is that your Twitter handle? Are you out there, brother? Is that your? Are you guys talking about JPM telling you where we're going? Don't ever do that. Don't listen to JPM and Goldman Sachs. I love Park City. It's changed a lot. It's not as it had this like golden hour sweet spot. The golden hour sweet spot started in the 80s, and then 90s kind of okay, but the early 2000s to late 2010 was great. And then that was probably the golden years. And then it's been It's been made Vale Part 2. Yeah, I love mountain biking there. They used to have nice free concerts up at Deer Valley. They had the regional quarterfinals for rugby in summertime. Their 4th of July celebrations, awesome. Yeah, the Alta crowd. I don't know if I should drop names here, but I used to know a few skiers from Alta that were back there in that time period. Yeah, what's the white elephant gift thing? I'm down for something like that. I got my daughter braces for for her birthday. She has a birthday and Christmas same time of the year, so we got her braces for her birthday. I love Moab. I've spent months there in Moab. I've spent months. Did the White Rim Trail. White Rim Trail's badass. What's the other one? That's the crazy one. The spider something spider trail or something was badass. All right, hold on. I'm gonna set this up for. Okay, we got 4 minutes left. I'm gonna do something real quick here. Hold on here. I got something for you guys here. I'm gonna put up. Hold on here. I need to put up a. I'm gonna show you guys something here. Okay. And everything crazy happens or whatever, I'll move it. But let's see if I can right banner. Give me a second here. See, replace this real quick. What's going on here? Oh, hold on 1 second here. I got some wonkiness I got to deal with here. Got something that's not a JPEG. Yep, I want to replace it on there. I don't know if this is going to work or not. All right. Bear with me on this. Hold on here. What's going on here? Having some wonkiness come up here. Hold on here. Just a second out there. We're going to have VolWiz coming up here in just a few moments. Let me see if he's here. I'll give him a shout real quick. It's going to be a little wonky here. He wants this chart shown for you guys. I don't know if you can see this chart or not. Yeah, that should be where he pops up on the stream. It'll be just a minute. I hope we don't have any technical difficulties in here. Just give me a couple seconds, guys. I'm working on it in the background. Just give me just a few more moments. Just going to make sure this goes well. So this is my first, whether you know this or not, I've had some voice interviews in the past, but never a live video interview. Is the first time. I've done some mock video calls in the past few days. So I just want to make sure that what we're doing here, we don't have any technical difficulties trying to get VolWiz on. All right, everybody. Let's see if I'm doing this right here. Not sure here, but I think we're introducing Volatility Wiz here. Can you hear me, VolWiz?
I can.
Can you guys all hear him out there? So if you don't know Volatility Wiz, he's from the FinTwit world. He's a market pro. So I know some of you. Can you guys hear him fine?
Yeah, pro. Let's not use the word pro.
I know. Is that terrible?
We're always all learning, right? I mean, all the time. All the time.
You guys can't hear him at all?
Right. Some days you get it right, and some days you get it wrong. Just the way it goes.
Let me see if I can turn this up. So we get your volume up here.
Okay.
You want to say something real quick again?
Sure. You want to talk about the press conference and the buffoonery that is the press conference? We can get right into that, which is kind of a funny topic.
Yeah, I think we can hear you here. I guess the couple of things I wanted to talk to you about was the volatility that's built into this event, and then the volatility built into tomorrow. It seemed like it was implied that there's some volatility built into tomorrow. The implied the vol crush that could happen, and then of course during the presser.
So did you get that chart I sent you?
Yeah, on my end they can see it.
Okay. So basically what that is a spread where I sold. I do this every quarter. I sell Wednesday of OPEX week and I own Friday because the pricing in that spread anticipates SPY going ex-dividend on Friday. So I usually get it for like 25, 28 cents or something. And I mean, that trade, I spread it out across, 200 or 300 SPX points, and it very rarely fails me. In fact, if I just did 4 trades a year, if I just traded 4 weeks a year and I did that, I'd have 200% annual return just on that. But like, obviously, I make mistakes, keeping myself interested in markets, right? So I'll trade earnings events and things like that. But I mean, that right there is a bread and butter trade that anyone can do. It's not that hard. You sell Wednesday, on Friday, a couple quarters a year. The Fed is the Wednesday, like in June it was. In September it was the week after. Yeah, so when you buy SPY for 25 to 30 cents, right, for 2 days after the Fed meeting, that's the other thing too, is the Fed meeting comes on, right? The presser's 2:30, so like the front's going to burn up as fast as, you can imagine. And it does, like, you could chart these things on Thinkorswim. So you could take which I was trying to send you a chart of the actual spread. It doesn't look right, but it's that simple. It really is. Sometimes the simplest trades work when you're using vol events, when you're trying to sell vol and own back vol, right?
Yeah, I was talking about it earlier that the option sellers today are cleaning up. We have some people inside the chat already saying this earlier, that they're closing them out right now.
Yeah, it's almost too late. They start crushing vol before the meeting, and I've seen, on Fed days, they start to hammer it before the euro close. They start hammering the vol, and I mean, that's a simplistic way of saying it, but but essentially the options just start falling in value. That's what it is. Who's doing it? I'm not gonna be like one of those guys who pretends to know who's doing it, but it's happening, right? The prices are going down. So yesterday I was out of almost everything that I do, almost everything. I kept a couple on just to almost for intellectual curiosity and just to see how they reacted today. And
we saw it on we saw it on the last day of November, right? And then we saw it again. We saw it again just yesterday. Matter of fact, I've got a hedge for March that was in some pain heading into the open yesterday.
Yeah, I mean, see, you want to talk about VIX and how stupid that is? Because it's a zero DTE conversation is what it is. You want to talk about that?
Yeah, definitely. You just talk. I'm listening. I'm always here to just hear you speak.
So what people don't get is on, like, saying November 30th, they're looking at VIX probably hit 18 and they're saying, oh, no one's afraid. Well, the options that the VIX are pricing are a month ahead. They roll from like 29 to 43 days. I'm pretty sure that's right, but don't quote me on that. Anyway, so that window is after Christmas. So the VIX isn't really telling you anything. It's not telling you anything, right? You could, what I watch is VIX 9-day, and that is, rolling 9-day VIX. And that tells you more because everyone's in the vast majority of options are being done 0 to 1, and they're being done in size by institutions. So why are you looking at 30 days out? It's a waste of time. It doesn't tell you anything. People want it to have predictive value, and it has 0 predictive value. I mean, I've changed my Twitter name like 3 times, just making jokes about the ball surface. Okay, so everyone's in the 0 to 1, and they're doing pretty well because, like, when you have a day like November 10th last month where the QQQ went up like freaking 7% in a day.
Yeah,
those guys are taking like a 30-cent option and making $30 on it, and you're like, wow, okay.
It was
so
the 0-day complex right now is unreal right now, and watching how they're coming in and trade. I've never seen it like I have the past couple months.
It's grown because it's a byproduct of Fed policy. Okay, so I can loop this all in for you. People were searching for yield. They came up with a lot of strategies, and the demand was there. So, like, the CBOE kept pumping out, like,
do you think this is like the meme stock baskets that they're doing too, or no? So you throw another basket for zero days?
I honestly can't talk. I can't talk about meme stuff because I just don't know it.
Yeah.
Like I never go there. I got asked about it on a podcast yesterday. I was like, I don't dig into these companies because they're zeros. And so like the fact they're saving hurts, right, by letting them do a bond offering because the stock's $3. Like I just don't dig. Okay.
Yeah.
So
They're running these news articles saying that they're now creating these meme stock baskets that these funds are, shorting down to super oversold, and then they jump right in there, pumping them back up again.
Yeah.
And so the zero day
company. I mean, if you're a trader, you love that because it's just another opportunity. There's vol in there. Like AMC options, I even looked like a week ago. AMC options is still a top 20 daily option volume trade, if you can believe it. It still is.
And that's not retail traders, right? I don't really think.
Well, the stock. What's the stock? $6? I mean, it is retail.
It's I think it's even lower, or it was lower this past week. I thought I don't track them at all. I just trade SPY.
Yeah.
I'll trade. Yeah, I'll trade the mini if I have to hedge. But
why
other than
though?
that,
Why though? Hey, dude. Why SPY when SPX is 40/60 tax, right?
Yeah.
40 short term, 60 long term, right? So like and it's not European, so that means they can't pull it away from you. SPY, they can take it away at any time if you're deep in the money, right? So SPX has like those benefits right there. Like people should be trading SPX over SPY, except in the situation I just gave you, okay? Which was,
say that again for the crowd because I think they're paying premium for bad options. Or good. I mean, even if it goes up, what you're buying them, at least on the buy side.
What do you want me? What do you want me to dig deeper into? The tax implications of the SPX options or SPY?
Yeah, I like the tax implications of SPX, but from the other side of it, I like the money that's made, the cash. For me, at least, well, most of my accounts not on SPY specific zero dates. It's all on spreads. Oversold, overbought conditions, but then I'll come in, of course, and I've got the Vegas bets account, and it's like let's go in there with a couple grand, $5,000. I used to be able to go in with more weight, buy a lot of weight, and then I noticed that I felt like the dealer or the order flow sellers are packaging me up with other people and. I was getting bad order flow, so and plus in this market, we were discussing earlier how you could be in a bad trade in a bull run, and it would eventually work itself out. You could buy 3-week option, 1-month option, and if you're in the top of that channel, it didn't matter. At some point, it was going to print, and there's just not that much money.
That is true. I mean, and like we're just circling right back to vol, right? So there are times when I'll look at, say, XLE or XLI options, and I go, they're 45 days, and they're $1, and that's 1% out of the money. I go like, holy crap, that's cheap, right?
Dirt cheap.
Cheap, because all you need to do, you don't need anything to really happen. You just need a down day, and it's doubles. So, but nobody's really out there. Like, I think the sellers are out there, right, a little longer because, like, old guys, what they like to do? They like to sell those culverts and sell those putverts, right? And like they get newsletters where they're like, sell this and sell that, and you look at it and they might get run over. I mean, like half the time I'm being asked to trade out of verticals that are just dead. And he's like, is there anything in there? No, right? So I don't get sucked into that. I'm a vol buyer a lot when things get a little bit ridiculous. Like so next week, for example, and it was just before Thanksgiving too, was a good example. Just before Thanksgiving, vol was just getting hammered and there was no point to it. So I just started buying puts. And then the Monday after Thanksgiving, right? What did the market do? Minus 60. So bam, done. You know what I'm saying?
Well, yeah. Well, it's. I'll try to repeat to the people that I'm talking to all the time about, it's like that buying low and selling high, and I'm like, it's not that hard to watch an option chain over time and just watch the ebb and flow. And you know, like Tasty shows you this, the life of an option. You can actually
They
watch.
kind of blow. They kind of blow though. I mean,
They do. What I'm saying, if you look
Yeah.
at the life of an option, you can watch the highs and lows and the decline of it over time.
Mhm.
And I'm still flabbergasted that. And then we're going right back to oversold conditions. They need to have that one trade that they can get in on and know it's going. It has a high probability of printing at some point.
Yeah,
whether it's selling or buying.
right. So the way I describe the vol service to people is I go, if you think about what you're paying for as a percentage of the underlying, so like when I put a spread on and I'm paying like 25 cents for SPY 2 days, I'm literally paying 2.5 points of SPY, right? So by the time it gets there, like the back end's not gonna be worth 2.5 points, right? Doesn't make any sense. So you could do that. You could be just a really good trader and buy longer dated options and do very well in this market. It didn't used to be like that. Like in 2017, you get your ass kicked, right? Because VIX was 8 and
the VIX was 8.
Things were just you just didn't get paid till Volmageddon happened, and then that like reshook, right? So that was some structural market issues there. Right, they closed a lot of those products down. They're not the same. No one's in there anymore, right?
Yeah, I wonder how many people here know about those crises that took place, or how the VIX was originally what was it built for, and then people started trading it
4 years ago. I mean, everybody has to remember that. And then, you know where they are now? They get their vol in like SQQQ, TQQQ, like the triples. And so sometimes during the day when the market's really either tanking or rising, everyone knows, or at least not everyone, a lot of people know that like the rebalance at the end of the day is coming, right? So these funds have to lay off or buy between, I don't know, 3:30 and 4 o'clock. And you'll see, I bet a lot of 0DD guys like start to perk up around like 2:30 in the afternoon.
Yeah, that's what I'm always looking for. On those dates, I'm always looking for anything that's beaten down to shit, down to the bottom depths of hell, and anything that's been bought all the way up. Because it's like last minute stuff, last hour or two. You know what? Tesla used to do that. You'd catch Tesla in a down cycle, a big, heavy down cycle in the last.
I didn't even look at that today, to be honest with you. I'm going to look at it right now because that freaking piece of shit.
Yeah, I'm telling you that right in the quarterly OPEX, it's like the last hour or so, and they just 150 points, boom, straight up, just blasting off, and you're like, what just happened?
You know what cracks me up is like, how many times did they split that thing, right? And then they go, oh, it's down. Yeah. I'm like, dude, the splits, like all of them got 100% on the splits.
Oh yeah,
it seems like, right? And so. And everyone front ran those buying short dated calls, right? I mean, because even I did that. I mean, right? So the fact that what's it worth now? What is Tesla? How much? Okay, off the top of your head, how many dollars per share will Tesla earn next year? Off the top of your head.
I couldn't hear you.
Off the top of your head. How much will Tesla earn next year? Dollars per share.
I think they've got them pegged at. I think they're saying that their EPS for next year. I think it's at 8. I think it's at 80 or 40. I couldn't remember. Someone was telling me earlier today.
They're gonna make like what? $5 next year. The stock's 175 last time. I'm gonna check it right now because I haven't seen it.
No, earlier today it was. I think it went down to like 156 or something.
Still getting hammered, right? So it's
155.
If you're tax loss selling Tesla today, you gotta wait till mid-Jan to buy it. So this
some people were claiming that their EPS should be, or that this morning someone had said it should be less than a $10 stock, of course, because if you're comparing it to Ford and other car companies.
Well, that's not true. Why should it be compared to Ford?
I don't think so when they're in growth.
All right, but
Hold on a second here.
they throw things in like tradable credits. They throw that right on the income line. You know that. Like, how much do they actually make as a car company? I mean, hell, a lot of earnings have been pulled forward in this thing, and is there going to be competition? I don't know. I'm not like an equity
Joe,
analyst.
how many times earnings are they trading right now, Joe? Is it like 100? Or is it 80 times? What is it? No, it'd be like, I don't know. I'm trying to figure out the math in my head right now.
Last time I checked, it was like 60 or something.
They were saying it's $7 per share.
That sounds about right.
Their
I said
EPS
5,
is
right?
$7
Yeah.
per $7 per share, but they're trading at, I forget what it is. It's absurd.
Well, just divide 7 by 160. It's like 20.
So 49. That's what Joe's saying. 49.28 is the fair value right now.
Bear value? What the hell is
Well,
a
not fair value. So hold on, we got Tesla's only
someone
29. I'm
imagining,
reading all
like,
these
the real
chat right
world
now,
dawning
and
on
I got a
people?
bunch of stuff they're being told.
Someone says if reality.
I got all
dawns
kinds
on
of numbers being
people-
thrown around.
Well, it could be any number. I mean, like when I took the CFA, that was a classic. Like the just like IV is to the option pricing equation, so is, you know, equity risk premium the wild card in like value and assets. So like you go like, oh, when you're doing the CFA, you're like, well, if equity risk premium is 5 or it's 10, I mean that's just a giant change over, like, you know, year 4 to 7 or whatnot. You know what I'm saying?
Yep.
So
Hey, so what I'm going to do here is we've got just a few minutes until the let me get some this news squawk going.
I go to Bloomberg personally because like I like Michael McKee and the Rod, and he so like he's the only one. He's one of the only ones out of the 30 questions people are allowed to ask questions. He's one of the only ones that asks a good one, right? And he'll do 2, and they're generally decent, and it sort of makes him sweat. So like Mike McKee makes Jay Powell sweat. It's funny.
When does
And
he
you know
usually
when Jay
ask
Powell's
the
sweating
questions?
because he goes right to the notebook and he starts reading the prepared lines, right?
Hang tight here. Sorry, I'm doing some technical stuff in the background. I need to have someone helping with the production side of stuff. I'm like trying to listen to you and reading the chat, and then I'm trying to get this news squawk up so we can hear.
Hey, you're having trouble finding labor?
We've got great labor here. It's that I'm not helping the labor to help. They're all free to all these. We have like a committed group of a trading group here.
If Correa is getting a 13-year, $350 million contract, right? Does that sound like money's tight?
I was discussing it. I was like, do large companies actually care about rates going up?
Yes. Well, at some point they have to roll, right?
1 minute remaining now.
They got to roll the debt out at some point. So yeah, they definitely care, right?
Yeah, like, okay, so we're coming up. We got 1 minute until the.
Here we go. I can't wait to see what the SPX does up. This is going to be hilarious.
You think it's going up or down?
This is where I take up.
I think we have a quick drop down to 402 maybe, and then we're going to start blasting up to 408 and bounce off it.
Okay, well,
these people are always asking. They're always. We'll watch. Do you see the liquidity drying up on Bookmap out there?
5 seconds.
10 seconds, boys and girls. You guys ready out there? You guys all positioned with your expensive stuff?
Ooh.
Initial weakness down to 402.78. Let's see if it holds here.
Hike 50 basis points as expected to 4.5%.
It's not even moving.
That inflation remains elevated,
Lame.
repeats that it's highly attentive to inflation risks. So just seeing the Fed's median view of the Fed's fund rate, so for 2023 it's at 5.1% versus 4.6% seen previously. So for 2024 it's at 4.1% versus 3.9% previously. For 2025 we're seeing 3.1% versus 2.9% previously. Longer view of the federal funds rate median target here at 2.5%, unchanged from the previous read. So the Fed says that inflation remains elevated, repeats that it's highly attentive. Only two policymakers project year-end 2023 Fed funds rate below 5%. So again, only two policymakers projecting the year-end 2023 Fed funds rate below 5%. Fed repeats that ongoing interest rate increases will be appropriate to attain a sufficiently restrictive policy stance. Inflation remains elevated, highly attentive. So the Fed says they will take into account the cumulative tightening policy lags and economic and financial developments in setting the rate hike path. Fed repeats that ongoing interest rate increases will be appropriate to attain a sufficiently restrictive policy stance. Fed says the vote in favor of policy was unanimous. Job gains have been robust, unemployment rate low. Indicators point to modest growth in spending and production. Job gains have been robust.
Oh, they're trying the
PCE inflation at 3.1% in 2023. Prior saw 2.8%, 2.5% in 2024. Previously at 3.3% and 2.1% in 2024.
They're digging in their heels, trying to tell the market that they're in charge. It's good.
PCE inflation rates unchanged. If the Fed also sees the US GDP growing 0.5% in 2023. Previously saw 1.2%, 1.6%.
I think I ended up dropping
2.3%.
I think I'm having some tough technical difficulties here. Hang tight.
Fed also sees the US year-end jobless rate at 4.6% in 2023, previously 4.4%, 4.6% in 2024, previously at 4.4%, and 4.5% in 2025, previously at 4.3%. Longer run, 4% unchanged.
Oh yeah, look at that blood. 399.86. 399.68.
So just to repeat some key points here, is the Fed median
drain this off.
5.1% in 2023.
I'm getting hungry here.
In 2024, Fed repeats that ongoing rate increases likely appropriate. So looking
just killing the stops down below.
Seeing some downside movement here as the dollar is seeing some upside movement after that summary of economic projections.
Oh yeah, baby, Dow hedge.
So again, did you see that risk-off reaction there in the markets following the higher terminal?
Yeah, I'm looking at buying this dip myself down here. I'm trying to bleed off some of this, some of this vol here to grab a dip buy here. That actually isn't too bad. So I want you to know that really wasn't that bad. The Fed's trying to make you believe still that they're on the right track. This is, telling you that they're doing the right thing.
Users know, do apologize for any issues on the website at the moment. We are experiencing extremely high traffic at the moment.
Yeah, we're on my end too. I dropped him through technical. He didn't drop out of the the chat here. He got dumped. On my end, I'm having technical difficulties as well. I'm having like flickering screen stuff in the background. So I'm assuming the internet's going crazy right now. Nice little tag below here. These are previous lows. These yellow lines that you're seeing here is a gap still to fill down below here. Bears to keep in charge here. Want to see some rejection above. Same over here as well. We are below the pivot right now. We're going straight to zero gamma. Let's see if this holds, if we can get a trade out of this. The options are still pricey. Still holding onto their options. Yeah, hang tight. He's calling me right now. Yeah, so he's saying he's having issues on his end too. He's trying. I think we're gonna try to get him right back in right now. Give me just a second here. I think he can just. I think he can just go back in. Are you still on? Nope. Okay, let me send you. I'm gonna send you a new link. Give me just a second. I'm gonna hang up with you. Yeah, there was totally kicked off right there. Hang tight right here. Yeah, I'm having I had like a internet spike here, and I guess his audio was scratchy. Yeah, it's not. It's. I'm interested in this. I'm interested in what was released because what the Fed's trying to tell you, basically, at least in this initial press release, is stating that they believe in what we're doing right now. I wouldn't take it necessarily as hawkish, but it'll be questioned for sure.
US rate futures price in a 61% chance of a 25 basis points in the next meeting, down from 72.6% just before the Fed statement.
Let's see if this is working here. So he's saying that he joined, and I'm not seeing. I'm not seeing it on my end. I don't know why I'm having some issues here, and I don't know why. I think it's on my end. I think I'm having issues. I'm getting like a. He's saying that he's here, but he can hear me speaking, but he's not on my. You don't see him on your end? I think what we'll do is we'll cut it short. We'll try to do another. We'll try to do it. My assumption is that the internet is going wild. Let me take a look here and see. Yeah, it's definitely not coming up on my end. He's saying he's here too right now. It's no big deal. We'll get back to let me give him a shot real quick. Yeah, it's on my end. I'm having trouble. When tech fails you. Still looking lower for some liquidity. Let's take a look to see if there's any here. So this is kind of interesting right here, right? You see this liquidity right below here. If we start breaking through this 397 or so, could start to see some real selling. So you want to watch this in here. If we can get a break down below here, this S1, this kind of opens the door down here. This S1 is very productive for bears. Oh yeah, baby, S-Dow. Yeah, still not getting trying to get him back on here. I'm having issues with it. I want to see these calls get nice and cheap so I can buy them. I didn't fall for that buying calls for $3 earlier today. Neither did he. I don't think he was on the call side at all. I think he was selling call. He told me earlier he was selling calls. You know, they want to be getting through this gap fill down here. So they did close the gap at this point. So here was a gap fill, and this is a previous low. So we'll get rid of this gap. See if I can bring this closer for you guys so you can see it. This is S1 down here, 397.20. Really like to see this touch down below. You can see on Bookmap the liquidity down below there. We should go down there and tag it. We'll see if that happens or not. And there's still call buyers out there. They're still loading the boat on calls here on 0 dates. I'm not game on this yet. Still too juicy for my blood. I don't like buying stuff that expensive ever. I'm interested to hear what the... Give me a second here. We'll try to get the interview on YouTube and play that. All right, so I got them queued up, ready to go. We'll listen to Jerome have his presser. Yeah, and they're trying to hold this right now. I'm not buying this at all. These are two previous lows. I really want to see this S1 get grabbed here. Yeah, it's the same for you too, Joe. It's too juicy. And we've got I know we've got Vol coming out tomorrow for the economic news. Yeah, did they say they moved the dot plot down? I thought they were talking about the dot plot moving down, or was that what they say? 60. I wasn't listening. I was like, I'm trying to do stuff in the background. I'm trying to read your chat, so I'm like mishearing what's being said from the news squawk. Okay, here we go. I'm gonna read some stuff off to you while we wait. Fed sees PCE inflation at 3.1% in 2023. The previous was 2.8%, and then 2.5% in 2024. Previous estimate was 2.3%, 2.1% in 2025. Previously, they said 2.0%. Longer run, 2.0% inflation. Fed sees year-end U.S. jobless rate at 4.6% in 2023. Previously, 4.4%. So that's implying they're saying that we'll have sticky, that employment's not, or that jobless rates aren't going to go up that much. And that's not good. I'm trying to read through some of this stuff right now. Fed sees core PCE inflation at 3.5%.
On a rate of 4.9% in June, up from 4.8% seen hitting in May, just before the Fed statement.
Fed median view of Fed funds rate is in longer run 2.5%. That's the same.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
So some of this stuff I'm reading, Fed sees U.S. GDP growing 0.5% in 2023, previously 1.2%. So this is that sideways market that they're looking for. That's significant to see and to note right here. Be interested to see what Chair Powell has to say. There are some revisions in here. Fed's median view of Fed funds rate at end of 2024 is 4.1%, previously 3.9%. Fed median view of Fed funds rate at end of 2025 is 3.1%, previously 2.9%. So I'm going to turn some of this stuff down here. Hold on here. Got some real weirdness going on here with desktop audio, the sound mixers. No, hold on a second here. Having some weird audio issues here too. Check 1, 2. Okay. Yeah, this is what Joe Donut and I were talking earlier, that they would pin this and torch both sides into the bell. Both sides were so overpriced that you could see a pin into this bell. Everything sounds good on your end over there? I'm having in the background, I'm having technical issues. Is there a chance of it pumping with Powell speaking? You know, it's looking like they're afraid of a price wage spiral. Well, I don't know if it's price spiral, wage spiral, or maybe just wages pinning. I don't like seeing that unemployment stuff. I'm interested that the Fed so far. This looks like the Fed is sticking to their guns. The trick would be, if you're a bull, the trick would be that the market takes that as believing the Fed is committed to its policy, no matter what. This is a Volcker light moment, not a full Volcker moment at the moment. So we'll hear him speak at 2:30 and see if he pulls a Volcker. Yeah, I'm reading through this right now. I thought I heard them. Hold on a second. I'll check to see what they said. The Fed vote was unanimous. Trying to see if there's anything else. Yeah, that's what I want to see. I mean, as a bull, we talked about this earlier. I showed you what I want to see for a bottom. I was hoping that they would come in and try to do 75 BPS. I was hoping they would rate. I was hoping that they would shock the market. This isn't really quite a shock. This is more. It looks like they're trying to. In my view, right without hearing Jay Powell speak, it sounds to me like this is basically what Volcker did. Right? Was he recommitted and said, "We're just going to keep doing this. I don't care." Now that can have an unintended positive outcome for bulls. So it depends on what the wording is going to be in the presser, of course, and with the questions that are asked. All right, I'm going to try to send a link right now to him. He wants to try to get in this again. So if the market believes that they're taking this seriously, quote unquote, I know you hear out there that the market can't go up. That statement is threading the needle for sure. Let me see if I can get I'm gonna try this again and try to get him in here real quick. Hang tight for a minute. And try this one more time.
So 10 minutes now to the bottom of the hour, where we are due to get the FOMC press conference with Fed's Chairman Powell. We have got the live video for this on the feed for those interested.
And I'll have Jay Powell up here speak, and we'll try to do a play-by-play. I was having weird audio issues too, and I shouldn't be having audio issues here, and I don't know why I am having audio issues. I'm gonna stop sharing. I have to hold on a second here. I'm gonna try to at least.
The Fed swaps upgrade the 50 basis point rate hike likelihood in February.
Maybe I need my Let me see if this works. Can you hear me right now or no?
So again, just to clarify the market.
Can you hear me right now on
from
the live stream or no?
FOMC. They're mainly from the summary of economic projections, where the Fed's median view of the Fed funds rate at the end of 2023 is at 5.1% versus the 4.6% seen in the September projections. Again, this did cause strength in the dollar, gold, and the S&P 500 weakened to see some whipsawing in the long-dated yields as well.
Check one. I'm having some issues on my side for sure. Can you guys hear me on my side? You guys have a little volume for me? Yeah, no, I've got you on mute. So in the background, I'm not trying to talk to you guys. I know it seems like I'm trying to talk to you. Why is that not fucking picking up? What the fuck is going on? God damn it. Let me see if I can put him on speaker so I can at least hear him. Like plug him in right here and see if I can put him on. Give me just a second out there. I'm going to try to get him at least on a call that I can put on a microphone. All right, so I'm going to try to put you on a mic right now at least, okay? Say something. Say, can you hear me?
I can hear you.
Sweet. I think I can pick you up on the mic here.
Yeah, I mean, that's all you need, really. any more of my staging background.
Yeah, I've got you. We're picking you up now. I've got you at least audio from you.
Cool. Like okay, so like right now I have 2 streams going. It's like sometimes I like have a battle between like CNBC and Bloomberg because I want to hear Mike McKee, and then I want to hear the dumb public's reaction, which is CNBC, right? And so I'll have dueling voices going, like this donkey Scott Minerd, whatever. Like he sucks, and I'll have him on just to hear what that donkey's saying because like he's running like several billion, and Diane Swan, she doesn't do anything basically, right?
I'm trying to read through right now what these.
Like,
so
I was already thinking ahead to JPM's conference call for Jan, and he's going to be crying like a freaking baby about the economy when that time comes. Like, you know what I'm saying? He's going to be literally crying about, oh, it doesn't look good. Oh, the Fed's going to stop. Oh, right?
Yeah, that's what I'm interested to see. He's trying to thread a needle right here, and I'm wondering he's like trying to pull vocal light bullshit or something. I don't know.
He's got the Batman red phone right to Jay's desk. You know that. So when he wants to say something to Jay, he does it, and then like when he wants to say it to the public to push Jay around, then he does that. Sort of like a double-barreled. He's got a double-barreled like plan of attack when it comes to the Fed.
I'm getting some feedback. Can you mute your?
I just did.
Yeah.
Yep. Sorry about that.
Oh, so we're right below Gamma Flip. Like this is Gamma Flip somewhere in here, and then even on the intraday.
I don't think it really even matters today. This is just people closing options. They're trying to get so. What's interesting is in 2 minutes, he's going to come out, and if they can glean anything out of it that sounds relatively positive, right? They'll take it and run with it. But the reason why 2018 reminds me of now is that he like tanked the thing, right? Christmas Eve was a half-day trade.
Yeah.
And it was down so much, right? I got a phone call.
That was 2018 when we just sold off into Christmas Eve, right?
I got a phone call, right, on Christmas Eve. Like, like, hey, why are we down this much? I was like, whoa. I mean, he doesn't want that. So I think I think he probably put out the toughest stuff in like what he just said, which is basically just the curve. And then, right? How much more does he have to say? Not much. He's going to trumpet the same lines. And there's not going to be a big move from here. There just isn't.
Oh, right? I'm looking at, if I can get just a little bit of capitulation, I want to buy some calls right now. I'm looking at those 405s. They're getting cheap again. The 405s like $1.30. I'm like.
The thing is, I mean, ES is sitting on a support line, and above where they sold it was the resistance line. So the whole thing, it's like if you're a TA guy, you're thinking it's gonna crack one way or the other, and it probably hinges on a couple things he says.
I want to see this little grab down here. There's a little band of liquidity down below right here. I'm just looking for this one little like pitch down and then fucking rip it up.
Right. I mean, that's what people are doing.
They're bleeding it off right now. I'm watching in the chain. They're bleeding off the options right now. So all you bears out there that are listening right now,
So just to make everyone aware, the live video for the press conference has begun. Fed's Chair Powell yet to take the stand. The video for
Where
this
the
is
hell is
available
he
on the feed.
speaking? This is not the usual room. This is not the usual room.
No, it's not. I'm gonna turn him up right now.
Looks like he's doing Congress or something. He probably has to be a little
The
higher
Fed swap
profile
rates
because
for
FDX
2023
blew
edging
up
higher
2 weeks
after
ago.
raising their
So,
decline.
Oh, here he goes. Is it what color is this tie? The blue tie. Is that a gray tie? Or is that blue?
yeah, I wish there was a line on that.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and
He's
market
gotta
profile
have a
levels
lot
by
of
signing up
things in
at
a read.
Before I go into the
tothick.com.
details of today's meeting,
He
I want to
doesn't
underscore
want
for the American people that we understand the
say
hardship that high
something
inflation is causing,
You know what
and
I'm
that we're
saying?
strongly committed to bringing
He's
inflation
going to
back down
go,
to 2%.
if someone asks a tough
Over the
question,
course of the year, we've taken forceful actions to tighten the stance of monetary policy.
You are.
We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do.
Forceful action.
Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price
He's taking a victory lap.
Without price
the economy
stability.
doesn't work
Fed's
for
Powell says
anyone.
the full
In
effect of
particular,
tightening
without
yet to
price
be felt.
stability, we will not achieve a sustained
we have more
period
work
of
to do.
strong labor market conditions that
He's
benefit
literally
all.
shaking.
Today, the
Paper's still
FOMC
shaking.
raised our policy interest rate by a half percentage point. We continue to anticipate that ongoing
need
increases
some
will be
CBD.
appropriate in order to attain a
I know.
stance of monetary policy that is sufficiently restrictive to return inflation to
Threading the
2%.
needle right
See the
now.
paper shaking?
He's threading the
literally
needle
shaking.
right now,
We
man. He's
continue
threading the
in
needle.
process of significantly reducing the size
You
of our
can't even
balance
read
sheet.
the open statement. I was shaking the paper.
Restoring
Fed's
price
Powell
stability
says we
will
expect
likely
ongoing
require
rate hikes are
maintaining a
appropriate
restrictive
to get
policy stance for
sufficiently
some time.
restrictive.
Would you take this job?
I'll have more to
for
say
someone
about
else in the
today's
team?
monetary policy actions
No.
after briefly reviewing
Still
economic
winning, right?
developments.
Also
No.
noting NYMEX WTI crude
The
futures
U.S.
selling at
economy has slowed
$77.28 per
significantly
barrel,
from
up
last year's rapid
$1.89
pace.
to spot 5.1%.
Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of
Also
this
noting
year.
U.S. Treasury curve spreads turned
Recent
flatter on the day
indicators
as
point
short
to
yields
modest
climb.
growth of
Fed's
spending and
Powell says
production
U.S.
this
economy
quarter.
has slowed significantly
never
from
forget
last year.
And consumer spending has
August
slowed from last year's
last
rapid
year
pace, in part reflecting
because-
lower real disposable income and tighter
Because
financial
he
conditions.
was like, he ran
Activity in the housing sector has weakened
that was a
significantly,
mistake. That was
largely
the biggest
reflecting higher
mistake
mortgage
probably.
rates. Higher interest rates and slower output growth also appear to be weighing on business fixed
I almost
investment.
threw a remote at the television. I was like, you freaking
As shown in our summary of economic
Oh,
projections, the median projection
he's-
for real GDP growth
The U.S.
stands
two-year
at just
Treasury is extending their drop to a new day low as Powell
0.5%
started
this year
speaking
and
here.
next,
Powell
well
says the
below the
economy
median
slowed
estimate of the longer
significantly
run
from
He's
the
breaking out
last
the
year's
charts
pace.
right now.
High rates also weighing on business fixed
Despite the
investment.
slowdown in growth, the labor market remains extremely tight, with the unemployment rate near a 50-year low. Job vacancies still very high,
I mean,
and
it's
wage
pretty,
growth
it's
elevated.
pretty standard. There isn't anything
Job gains have been
surprising
robust,
looking at the
with
chart.
employment rising by an average of
Powell says
272,000
labor market remains
jobs per
extremely
month
tight.
over the last 3
Not
months.
in a time.
Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year,
It's
the labor market continues to be out of
acting
balance,
normal.
with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed
Fed's
since
Powell
the
says
beginning
although
of
the
the
job
year.
vacancies are down from
The
earlier in
FOMC
the year,
participants
labor market
expect
still out
supply
of
and
balance.
demand conditions in
saw
the
him
labor
do
market to
a,
come into better balance over time, easing upward pressures
meeting
on
with small business
wages and
leaders.
prices.
like 2 months ago.
Come on
The
down,
median
baby.
projection in the SEP for the unemployment rate rises
I wanna
to
hit this S1
4.6%
so bad.
at the end of next year. Inflation remains well above
There
our
we go.
longer run goal of 2%.
Give me some cheap calls.
Over the 12 months ending in October, total PCE prices rose 6%. Excluding the
tell me
volatile
that
food
you're
and
a
energy
zero.
categories, core PCE
Look
prices
at that
rose
beautiful little
5%.
tap down below right
In
now.
November, the 12-month change in the CPI was 7.1%, and the change
Gorgeous
in the core
tap down
CPI
below,
was
397.24.
The inflation data received so far for October and November
Yep.
show a welcome reduction in the monthly pace of price increases.
Unemployment.
But
It's
it will
unemployment.
take substantially
down.
more evidence to give confidence that inflation is on a sustained downward path. Price pressures remain evident.
Like the
across a
inflation thing,
broad
I'm like, I
range
don't
of
want to
goods
hear the
and
bullshit
services.
inflation. He's
Russia's
doubling
war
down.
against Ukraine has boosted prices for
Hold on
energy
here.
and food and has contributed to upward pressure on inflation.
Like
The
What
median
point
projection in the SEP for total PCE inflation is 5.6% this year
pandemic.
and
Don't
falls
forget, limit
3.1%
down.
next
I
year,
used to love limit downs.
2.5% in 2024,
I love limit
and
downs.
2.1% in 2025.
Yeah. Did you say a
Participants continue to see risks to
5,
inflation
6,
as weighted
7%
to the upside.
every day of the
Despite
week.
elevated inflation, longer-term inflation expectations appear
Gorgeous
to
right
remain
here.
well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not
They
grounds
just
for
they just
complacency.
tagged and broke
The
through. They're
longer the
trying to
current bout of
maintain and
high
hold
inflation
this S1
continues,
right here and
the
try to
greater
trade
the
it
chance
down.
that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American
Well, the other
people.
thing too is, so this was the liquidity.
colleagues and
This
I
is where
are
the
acutely
liquidity
aware
was
that high
on
inflation
Bookmap. There's
imposes
not much
significant
below it.
hardship as it erodes
It kind of gets
purchasing power,
bloody anywhere below here.
especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning
Yep.
inflation to our 2% objective.
Yep.
At today's meeting, the committee raised the target range for the federal funds rate by a half percentage point, bringing the target range to 4.25% to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.25 percentage points this year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
This is
Over
kind
the
of it
course
right
of the
here,
year,
boys and girls. If this
financial
doesn't
conditions
hold
have
right here, you
tightened
should be seeing
significantly in response to our policy
38.50, or I think it's
actions.
38.52, but I could be
Financial
wrong.
conditions fluctuate in the short term in response to many factors, but it is important that over time they reflect
Not that heavy a selling though either, Vol. It's not.
policy restraint that we're putting in place
Hey, buddy.
to return inflation to 2%. We are seeing the effects on demand in the most interest-sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity,
Yeah,
and
well, that's the
inflation,
other thing is that it always
the
comes
committee
back.
decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous 4 meetings. Of course, 50 basis points is still a historically large increase, and we still have some ways to go. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 5.1% at the end of next year.
And they buy futures.
A half
Once you're
percentage
down
point
below
higher
zero
than
gamma, they
projected
start
in
buying
September.
futures.
The median projection is
they have
4.1% at the end of 2024 and 3.1% at the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now.
Ooh. I'm watching right now
Our
like
decisions will
Tesla
depend on
because
the
I want to
totality
see
of
if they're
incoming data and
if
their
they're buying
implications
this
for
while
the
everybody's
outlook for
scared right
economic
now or
activity
not.
and inflation.
I've got it tagged
We
at
will
4.
continue
They
to
just
make our decisions
broke
meeting
through
by meeting and communicate
155.21.
our thinking
It
as
opens the
clearly as
door down
possible.
at 134, but I'm
We're taking
watching
forceful steps to
the
moderate
volume
demand
right
so that
here
it
on
comes into
Tesla to
better
see if they're
alignment with
buying it while
supply.
everybody's panicking.
Our overarching focus is using our tools to bring inflation back down
It's
to our
not
2%
goal.
goal.
On
and
a
to keep
5-minute on the
long-term
SPY,
inflation
we've got 3
expectations
million
well anchored.
buys.
Reducing inflation is likely to require
I want to see just a
sustained
little
period
bit
of
more.
below-trend growth and some softening of labor market
15-minute
conditions.
charts getting bought up. The last
Restoring
candle's
price
wicking
stability
higher.
is essential to set the stage for achieving maximum employment and stable prices over the long run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities,
Yeah, it's
families,
it's
and
not that
businesses
big of a
across the
move
country.
in terms
Everything
of
we do is in service to our public
there's
mission.
no bloodbath yet.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
In 2017, like 13, 15
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You just talked about the importance of market conditions reflecting the policy restraint you put in place.
His Bears want
Since
Bears
the
want blood
November
into this
meeting,
bell,
the
and I'm like, I don't
10-year
know.
has
You
declined
may
by
get you need to
60
get some
basis
good
points.
Q&A. If
Mortgage
Bears
rates
want
have come down.
productivity in
High-yield
here, they
credit
need
spreads have come in.
a
The
question to come
economy's
out to say, are we
accelerated,
open to
and,
higher rates? I
the
guess
stock
that would be the only
market's
thing
up
that I would
6%.
say. Other
Is
than that,
this
this is
loosening of
over.
financial
When you
conditions
need
a
Jay
problem for the
Powell to
Fed,
be
his effort,
asked
and its fight
questions
against
that are.
inflation? And if so, you need to do something about that, and how would you do something about that? Thank you.
So as I mentioned, it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place to bring inflation down to 2%. We think that financial conditions have tightened significantly in the past year, but our policy actions work through financial conditions, and those in turn affect economic activity, the labor market, and inflation. So what we control is our policy moves and the communications that we make. Financial conditions both anticipate and react to our actions.
Better watch out if you're in puts right here. Be real careful. They could reverse back down up here. You get a reversal candle, but I'll tell you what, you always want to see like continued blood. You just want to start breaking levels. If you're not breaking levels fast,
which is why we say that we would expect that ongoing hikes would be appropriate.
Yeah, it did. I wanted. That's where the liquidity was right on R1.
Our current
Let me S1
of what
right here is there was not S1. Yeah, right here at S1 there was
as you will have seen.
You're either gonna bloodbath it down to like 38, 25 or something below this. You know, you blast right through S2 without a doubt. So they were sitting right here.
So that's our best assessment today for what we think the peak rate will be. You will also know that at each subsequent SEP during the course of this year, we've actually increased our estimate of what that peak rate will be. And today, the SEP that we're published shows that, again, that overwhelmingly FOMC participants believe that inflation risks are to the upside. So I can't tell you confidently.
Yeah, you do black skulls. You add up all the puts, all the calls.
Again, at the next SEP, I don't know what we'll do. It will depend on future data.
And you can see where the bands are. You know exactly where they are. You know where they're positioned.
That peak rate will be based on what we know.
And you need if they break through, even when they break through, all you're looking for is a dip to buy. You find a decent dip to buy, and it's going up. Dealers will step in every single time. And they've got 8% of the money that's moving is theirs, so they're gonna step in at some point and buy.
Questions. The SEP, like you mentioned, suggests that the Fed will be making another.
No, dealers they have to step in at some time and take the opposite side of the trade.
2023. I wonder if you would foresee that being in 25 basis point increments, 50 basis point increments, sort of how you.
Well, plus tomorrow they're dumping tons of. I'm wondering if the unemployment data that's coming out tomorrow is not good.
Yeah.
And that's what we were talking about in stream earlier was.
You know what? I didn't even know that.
So,
yeah, man, we got a whole bunch of crap coming out tomorrow. We've got
as I've been saying, as we've gone.
We've got initial jobless claims, continuing claims, retail sales, Empire State. Not that means shit. Philly Fed, manufacturing index. We've got industrial production index. So he was harping on GDP earlier, capacity utilization rate, business inventories, all that kind of stuff.
Basis points this year.
I wonder how many people are trapped in, or not trapped, but they're in puts right now thinking we're getting bloodbath in the depths of hell. And we're not. It's not going to happen. They're killing both sides right now.
What is the ultimate level? And then at a certain point, the question will become, how long do we remain restrictive? That will become the most.
Oh, yeah, that's right. That's right. I forgot that one. I forgot that one.
So, and
that's the big news for tomorrow.
So I think we'll make the.
We got PMI on Friday too.
Data and where we see financial conditions, where we see the economy.
This is thank you for playing right now going on in the market.
But for that decision, but
take all the call money up here, take all the put money down here. Thank you very much.
Looking at our progress on inflation, looking at where financial conditions are, and making an assessment of whether policy is restrictive enough. I've told you today we have an assessment that we're not at a restrictive enough stance, even with today's move.
Yeah, 400 Cs are cranking right now.
Our individual assessments of what we would need to do to get there. At a certain point, though, we'll get to that point, and then the question will be how long do we stay there? And there the strong view on the committee is that we'll need to stay there, until we're really confident that inflation's coming down in a sustained way, and we think that will be some time. Now, why do I say that? If you look at
this is kind of like last place for the Bears to hold it right here.
Into three sort of
Bears need to hold this right here.
Goods inflation, and we see. Now, as we've been expecting, really,
we'll see if they do it. I'm not hearing anything that's like doom and gloom. Maybe we bleed off into the close or something, but it's not bullish.
And maybe goes back
to
services a little bit, and we start to see.
It certainly isn't. We're not breaking levels right now either.
In this report and the last one. Then you go to housing services. We know the story there is that housing services inflation has been very, very high and will continue to go up actually as rents expire and have to be renewed. They can be renewed into a market where rates are higher than they were when the original leases were signed. But we see that the new leases that the rate for new leases is coming down. So once we work our way through that backlog, that inflation will come down sometime next year. The third piece, which is something like 55% of the index, PCE core inflation index, is non-housing related core services. And that's really a function of the labor market largely. That's the biggest cost by far in that sector is labor. And we do see a very, very strong labor market. One where we haven't seen much softening, where job growth is very high, where wages are very high.
I think I got Apple at 70 or something like that, 74.
Quite elevated, and really there's an imbalance in the labor market.
I think I do.
Supply and demand. So that part of it, which is the biggest part, is likely to take.
I don't know. I don't think they're going to cut it in half. I think they got to protect. I think the
goods inflation has turned pretty quickly now.
I don't think that they are
turning at all for a year and a half. Now it seems to be turning.
That's the thing is that I think they're trying not to fuck with pensions. Sort of looks like they're parking money everywhere. They parked it in the Dow. So where are they going to park it now? They got to hide the money somewhere
to get to where we want to go. And
do they hide it in high quality bonds?
Expecting that they'll have to remain high for.
That's my assumption is.
Apple did a lot of bond deals.
Howard Schneider with Reuters. Thanks for taking the question. You described GDP growth in the SEPs as moderate or modest, I believe. Yet it's really approaching stall speed. Half a percentage point is not much. You described labor market unemployment rate as representing some softening.
Yeah.
But it's nearly a full percentage point rise, and that's well in excess of what has historically been associated with recession.
No.
Why wouldn't this be considered a recession?
All right, Bears, this is your time to shine, man. You better get the. I don't know what to say to you guys out there. Break below here, right? Give some hope to the Bulls and hope we can bloodbath this down. But
the expectations in the SEP are basically, as you said, which is we've got growth at a modest level, which is to say about a half a percentage point. That's
I'm watching it right. I'm looking inside the options chain right now, and I'm like, they're just vacuuming all this up right now. They're repricing all of this right now.
In that condition, labor market conditions are softening a bit. Unemployment does go up a bit. I would say that many analysts believe that the natural rate of unemployment is actually elevated at this moment. So it's not clear that those forecasts of inflation are really much above the natural rate of unemployment. We can never identify its location with great precision. But that 4.7% is still a strong labor market. So if you look, you've got.
I'm interested. I'm very interested right now in the track that he's taking with
companies are very reluctant to lay people off.
I feel like it's
companies, which is a story unto itself. Generally, companies want to hold on to the workers they have because it's been very, very hard to hire.
Yeah, he has to say something to make it go somewhere. Well, I don't know.
It's of the number of employed people.
I feel like he's trying to be like Volcker Light right now, and I'm like,
a lot of people will need to be.
I don't really want Volcker Light. I want like hardcore Volcker.
Through which the labor market can come back into balance with relatively modest increases in unemployment, we believe. None of that is guaranteed, but that is what their forecast reflects.
And I have no choice. That's it.
Thanks, Nick Timmeros.
He's hoping and praying he can get out of this interview. I think it looks like he is. Oh, here's Nick Timmeros.
To step down the pace of rate rises appears to have been socialized at your last meeting, largely before the past two CPI reports showed inflation decelerating in line with the committee's forecast this year.
Yeah, Chase Winters saying somebody asked Powell how he feels about the Dow, 5% off all-time high.
Does that mean, all things equal, you would feel more comfortable probing where the terminal rate is by moving in 25 basis point increments, including beginning at your next meeting?
So I haven't made a judgment.
Tons, Matthew. You seeing this?
Size rate hike to make at the last meeting. But what you said is broadly right, which is having moved so quickly and having now so much restraint that's still in the pipeline.
Oh man, they're just catching people right now so bad.
To move to a slower pace.
They're just burning.
That will allow us to feel
torching options right now.
and get to that level, we think, and better balance the risks that we face. So that's the idea. It makes a lot of sense, it seems to me, particularly if you consider how far we've come.
He bred him the surrogate.
But again, I can't tell you today what the actual size of that will be. It will depend on a variety of factors, including
You're like cute Nick over in the corner.
The state of the economy, the state of financial conditions.
With the CPI
This is a dog and
report that
pony
came out
show.
last week, do you think it would have changed some of those
At the end of the
forecasts
day,
in today's S&P?
If they got it to
Absolutely
pin,
not.
if they got it to
No,
pin right into the close of the opening price was, I'll laugh my ass
Just a
off.
matter of practice, the SEP reflects any data that comes out during the meeting, and participants know that they know this, that they can make changes to their SEP during the meeting.
They're just Matthew.
well
You're
in advance of
watching
the
this,
press
right, bro?
conference,
They're
so
just
not
torching options right now.
That's not the case. It's never the case that the SEPs don't reflect an important piece of data that came in on the first day of the meeting.
did you know that?
I kind of do.
It was like
Hi, Chair Powell.
Yeah.
Rachel Siegel from the Washington Post. Thank you for taking our questions. I'm wondering if we could talk about the projection for the unemployment rate. Why has the Fed raised its unemployment projection? Is it because the model suggests that a higher terminal rate would automatically cause a higher unemployment rate? Or are you seeing signs that the labor market isn't quite as strong as we think it is now?
No, it's not about the strength of the labor market. The labor market is clearly very strong.
I think I've
It
heard
is
this
more
story,
just that,
but I
you
don't
know, by
remember the
now,
story. But tell it.
We had expected, we've continually expected to make faster progress on inflation than we have ultimately, and that's why the peak rate for this year goes up between this meeting and the September meeting.
There's no heavy selling here. It's like it's almost half and half. It's not.
So that's why that goes up.
This looks like they're jumping rate. This looks like rotation under the cover of doom and gloom.
In the media, I don't think, but that's the idea, is slower progress on inflation, tighter policy, probably higher rates, probably held for longer, just to get to where the kind of restriction that you need to get inflation down
Well, so
to
on
2%.
Sunday, I posted to them. I said, I don't care what happens on CPI. It's coming straight back down or up to the like a revision right back to where we were. It doesn't matter what they say.
You know, you can look at history.
They'll bring it right back, and they did. They brought it right back. It was like by end of day, it bounced off 400 or something. And I'd say just expect a bounce there. It did. It bounced right there.
Why do we think that is the case? So I'll give you a few
sold
reasons.
right. It started selling back down right at the opening bell.
Overhang of vacancies, meaning that vacancies can come down a fair amount, and we're hearing from many companies that they don't want to lay people off, so that they'll keep people because it's been so hard. I mean, I think it feels like we have a structural labor shortage out there, where there are 4 million fewer people, a little more than 4 million, who are in the workforce available to work than there's demand for workforce. So the fact that there's a strong labor market, means that companies will hold on to workers, and it means that it may take longer, but it also means that
I saved a picture of it. So as it was rolling over, I took a quick screenshot of it rolling.
That's a reasonably possible outcome, and you do hear many labor economists believe that it is. So we'll see, though.
I trade oil, CL futures frequently. I'll trade you.
Thank you, Colby Smith with the Financial Times. How should we interpret the higher core inflation forecast for 2023 in the SEP? Does that not then suggest that the policy rate currently forecasted for next year should actually be higher than the 5.1 medium estimate penciled in?
Like I gotta go.
Well, I think that's why one of the reasons it went up was that core came in stronger this year. Yeah, what you see is our best estimate as of today, for how high we need to raise rates, how much we need to tighten policy.
I was on Wall Street Bets when people were saying they were going to take
to slow economic activity,
take delivery on oil in their backyards, like guys living in Texas and shit.
Through those channels. That's all. That is the estimate, best estimate we make today. And as I mentioned, we'll make another estimate for the next SEP, and we'll, of course, between meetings we do the same thing, but we don't publish it.
One guy who was really good. He lived in the castle.
Hi, Victoria Guida with Politico. I wanted to make sure I understand specifically what's going on in the SEP, because you all expect rates to go higher, but you're also more pessimistic about what inflation is going to look like next year. And I was just wondering, given that we have seen some cooling in inflation, is that primarily because of wage growth that you expect wage growth to be sort of a headwind?
No, we're going into next year with higher inflation than we had thought, right? So we're actually moving down to the level that we're moving down to next year is still a very large drop in inflation from where inflation is right now.
Are you guys watching the options chain right now? They're just eating calls and puts right now. They're just burning. They're just torching them. I'm watching.
We're moving down.
I was looking at 400 Cs. They're like $1.58, and they're blasting down to like $1.47 on a half-minute wick.
So we're getting down. I believe the median is 3.5%. That's a pretty
they're all closing.
Significant drop in inflation.
No, you're not at all. I'm trying to talk to the people that are watching right now.
From the goods sector,
that this is not probably the time to enter a trade right now.
Begin to see lower inflation from the housing services sector. And then, the big question is how much will you see from the largest, the 55% of the index, which is the non-housing services.
Well, the implied range was, we'd move 100 points in the next 2 days.
You need to see a better balancing of supply.
I think it's 100 total today and tomorrow. We're not seeing that.
Wage increases. We want strong wage increases. We just want them to be at a level that's consistent with 2% inflation. Right now, if you factor in productivity estimates, standard productivity estimates, wages are running well above what would be consistent with 2% inflation.
You just bang. Right.
Yeah, I mean, it's straight back. We're not getting the 100-point move right now.
Neil Irwin with Axios. Some of your colleagues have been pretty explicit
that
they can't imagine rate cuts happening in 2023. That's certainly not implied by the SEP. But futures markets have priced in some easing in the back half of next year. What's your view of the likelihood of any kind of rate cuts next year? What circumstances?
Yeah, they're losing it right now. This is turning bullish right now. Bullish-ish right now. It's kind of funny. They're just eating. I'm watching them right now. And they're just tearing through. So we're going up right now. And SPY calls are going down.
And we think that we'll have to maintain a restrictive stance of policy for some time. Historical.
I tried telling people this morning. I was like, just wait. Just be done with it.
I guess
wait until this ball rolls off. I'm like, you don't want to be buying
until the committee is
it's so expensive
that inflation is moving down to 2% in a sustained way. So that's the test I would articulate. And you're correct. There are not rate cuts.
You guys are watching this out there, right? They're just tearing through options right now for zero dates. They're gonna get into that bell, and it's gonna grind them.
With Bloomberg. Let me ask you about China. In the last few weeks, China has abandoned its COVID policy and been reopening pretty strongly.
They'll go after it between 4 and 6 if you're still in a spread. Give you a phone call on Monday and say you're fucked.
Or inflationary because it obviously brings a lot more demand globally, improves the global outlook for growth, and
you got these weird closing rules on options.
Right. So you're
they can
right.
come
catch you after
4:15
weaker output in China
till 6 p.m.
They'll
say that they'll say that you have to that's why you close spreads before.
That could push inflation up.
You don't ever let a spread expire into a bell.
How much
there's
two will offset each other, and it doesn't.
There's all kinds of finagling after the bell
to overall net effect would be material on us. But
that is true, and they'll come back.
China faces a very challenging situation in reopening,
and they can hold you to it, but you can't trade it.
Waves of COVID all around the world.
It has something to do with
It has
something to do with when they count
that. A very critical manufacturing place for manufacturing and exporting. Their supply chain is very important. China faces a reopening. They've backed away from their COVID restriction policies. There could be very significant increases in COVID, and we'll just have to see. It's a risky situation. But again, it doesn't seem like it's likely to have material overall effects on us.
I gotta get out of this, and because
Hi, Chris Ruger, Associated Press. Thank you for taking my question. I wondered if you could comment a bit more about yesterday's inflation report. I mean, it showed inflation cooling.
All right, hold on one second. I'm looking to buy some calls here. Hold on here.
Are you starting to see? Are you confident that you're seeing real progress on getting inflation under control?
I'm looking at 400 Cs. They're coming down. They're like $1.39 or so.
unentrenched upward spiral.
Just 400C.
Right. So
yeah,
want
to ride them up
so
like
October and November. We don't have the some of the. We have some remaining
SPY 400Cs. They're $1.49ish. They're like moving like $1.46.
Statement, it will take substantially more.
So you got to catch them on a low. I try to catch them like $1.30 or something.
Downward path.
And but not yet, man. They're not ready yet.
This report
they should be
much in line.
So they should be like 30 cents right now, and they're still 4 times what they should be. But just give it a minute if this grind. I remember change my.
As I mentioned, we've been forecasting significant declines in overall inflation and core inflation in the coming year, and this is the kind of reading that it will take.
I got a phone in my hand. You want me to set up a condor right now? I could, but
forecast rather than at this
like
point
right there,
changing our forecast. In terms of the pieces, we have been expecting goods inflation to come down as supply
nice
chain
condor in
eased.
here between
That's
R1 and S1.
Housing services, as I mentioned, there is good news in the pipeline as long as new housing leases show declining inflation. That will show up in the measure around the middle of next year, so that should help. And the big piece, again, is core services ex housing, which is very important. And we have.
I don't think we bleed down below like 396 or so.
There, but ultimately,
I think even if we head down this way, I don't think it's going to be that ugly.
Mentioned of PCE core index, and it's very fundamentally about the labor market and wages. If you look at wages, look at the average hourly.
All right, hold on.
Number we got.
So hold on, I'm going to put you on. I've got someone ask me to talk to them.
Payrolls report.
I'm going to talk to some of these people real quick because they're looking for some guidance. Okay, let's talk about some stuff here real quick.
There may be composition effects and other effects in that, so we don't put too much.
Hold on one second here.
One report. These things can be volatile month to month, but we'll be looking for wages moving, down to more normal levels where workers are doing well and ultimately their gains are not being eaten up by inflation.
Excuse me, Michael McKee from Bloomberg Radio and Television. There's a little bit of a disconnect between the optimistic view you just expressed about the economy.
So I'm trying to listen to these guys talk right now.
In the SEP.
I want you to know that.
I'm wondering if you're reacting
take a look here real quick.
The fact that the markets have
just
loosened financial conditions, or if you feel the Fed may be a little bit behind on inflation, whether
I'm surprised at all this talk about inflation
we're seeing is transitory or not.
This is all fluff.
The idea of a soft landing if you're projecting just
okay. So I want to show you guys some stuff here. Okay.
So, if I think I got your question. So,
just take a.
I think our policies are getting into a pretty good place.
So I want to show you guys here. Okay, you got.
We're
need you guys to see this down here. Yeah, we're blasting up right now.
Sufficiently restrictive. We laid out today what our best estimates are to get there.
Hey, did I call that trade right or wrong? Look at that trade.
It boils down to how long do we think this process is going to take? And of
just
course,
ripping higher now. Just blasting through.
Reports for the last 2 months. They're very welcome, but I think we're realistic about
it's $1.40.
That's all.
To now $1.91.
We see.
So
prices coming down. We understand what happened with.
You guys know what this. So I was talking to Joe on the phone earlier, and I was saying because Volwiz has said to me, he's like, they got both sides just built up into this event, right?
That this will take some
and what are you watching happening right now, right?
At a restrictive level for
just straight back, right? Watching this happen, right?
Two good.
Drove it up, right? Sold it straight down, brought it right back up right now. I mean, and who are they capturing in here?
That there's,
capturing all these
inflation is 6%.
Guys up here, capturing all these guys down here, and they're just grinding, right? This ground puts up in here, right? Came back down to this other side over here and just ground down the call side, right? Thank you for playing. This is basically the market telling you thank you for playing. All this lead up, And what are you left with here? And even this morning we were talking about not trading this, right? You just sit here and wait for all this nonsense to play out. and you're not doing the pay to play.
So I just
remember I
don't think
took a
anyone
trade
knows,
earlier this morning here, and I think I risked like $2,900 or something, $3,000 or something like that.
It's
and we were going up, and I think I made like $40 or $60, and I'm like, this is insane. Like I'm sitting here with risk on the table, not a lot, but $3,000, and I'm not getting paid for sitting in here for risk in here.
Significantly,
and you're watching us right now, right? They're just cleaning it up right now.
Given the historical record.
Hi, Chairman Powell. Brian Chung, NBC News. You warned Americans of pain earlier this year as the Fed hikes rates, but with the Fed now expected to raise rates higher than you thought when you first said that, just wondering where we are in that pain. How would you describe that to Americans if the projections on unemployment find themselves? That would be 1.6 million Americans.
Oh man, this is terrible. This is awful. Like watching this is terrible.
The largest amount of pain, the worst pain would come from a failure.
Came right back down, destroyed him. Came right back up, looking to sell it down. This is ugly.
To
do this nasty shit,
so that the ultimate cost of getting it out of the economy would be very high in terms of employment, meaning very high unemployment for extended periods of time, the kind of thing that had to happen.
Did he say pain, James?
Inflation really got out of control, and the Fed didn't respond aggressively enough or soon enough.
Yeah, this is so Chase is bringing up a very fair point here, right? But you still don't want to buy him here, and you still have a vol event tomorrow, a small one.
It's raising interest rates for people, and so.
But do not. I'm not. You don't want. I don't.
Kind of thing.
Like you hold. Like you're trying to buy like 1 month out puts in here.
And
I don't know.
A completely painless way.
Like you're gonna see, you're gonna see
stability. There isn't.
Dealers will buy futures here, guaranteed. It might come back down by morning, but
I do
you have some kind of trade like this in here,
and markets are
and they're repricing right now.
It seems to me that we will get inflation under control, and I believe we will. We're certainly highly committed to do that.
You might actually get your Christmas rally.
Thank you, Mr. Chair. Grady Trimble with Fox Business. You've reiterated today, and the committee has reiterated its commitment to that 2% inflation target. I wonder, is there ever a point where you actually reevaluate that target and maybe increase your inflation target if it is stickier than even you think it is?
That's just so changing our inflation goal is just something we're not thinking about. It's not something we're not going to think about. We have a 2% inflation goal. And we'll use our tools to get inflation back to 2%. I think this is.
We showed this sell. We showed this. They actually did swing it back up and tag that upper level, and then they just started dropping it down right here.
Consider that under any circumstances.
We're going to bring it right back to mean revisions, right in there.
Back to 2%.
Thank you for playing. We're not gonna.
Thank you, Chairman Powell. Nicole Gutkind, CNN Business. As you monitor wage growth and unemployment data, I wonder if you're paying close attention to a sector or even income level. Like, how do you factor
Matthew
potential
Phillips.
exacerbations of inequality?
I appreciate you supporting the channel, my man.
Especially given the K-shaped recovery of 2020.
I mean, just look at that.
So
just look at that. That's like a big. That's like Merry Christmas to the dealers. Merry Christmas.
The labor market that we had.
Thank you for playing. We're not going to try to crash the market on Christmas.
So what that looked like was wage increases for the people at the lowest end of the income spectrum.
Right on, Matthew. If any of you guys didn't lose any money in this today, at least you can cut yourself 3 ways, right?
And gender groups.
You either lost money today.
In recorded history.
You had wealth preservation, which I told you to do,
and that all of that because of a tight labor market.
And then I told,
a tight labor market, which
some of you were like, we're gonna crash it right now. Or I don't know. Maybe some of you guys are all just selling puts. I know some in the stream earlier were just selling
something that would be really good.
Puts and calls, which was the play. If you saw one side, you guys, when we walk into these events, right? You guys ever notice when you're in the stream with me, sometimes you'll see lopsided options chains, right? You'll see like juiced puts or juiced calls.
That's a really good thing.
And we'll always take that other side of that trade, right? Every single time.
And we'd love to get back to that. That's what our goal is. There's
and they'll call you a contrarian trader, but you're not. You just know it's going there. They're not going to print that other side. So you can see right now that they juiced both sides. This morning we were talking about it, right? Look at how much puts cost. Look at how much calls cost on a 0-date option.
It would happen here, but.
And so what are they going to do?
Economy for several decades of
they're going to take both sides.
Stability is something that really pays dividends for the benefit.
That's what it is. You guys, we
the
walk in
economy
here
and
every
the people
day,
in
right?
it
We do this live
over
stream
a
every day, and we're
very,
like,
very
hey,
long period of
30
time.
cent
And so
puts,
when
they're
it is
cheap right
lost
now.
for whatever
Hey,
reason,
look, 30 cent
it
calls,
has to
they're
be
cheap right now for tomorrow.
and as quickly as possible.
Tomorrow, like
which
you
is
know,
what we're doing.
some days we come in here and we're like, we're at a peak, and we're like, hey, you see those 30 cent puts for tomorrow?
We do.
And you've
Yes,
got
we
calls that are
absolutely
like,
we look at
same 30 delta, and they're
it's
like
our regular
$5,
practice to
and I'm
talk
like,
about
dude, we're not
unemployment
doing
rates
this.
by different groups, including
They're
racial
not,
groups.
they're not
and-
printing
and that sort of
$15
thing.
calls
We do.
tomorrow.
We keep our eye on that.
Hi, Nancy
Appreciate it, Nino, for
Hutchins
supporting
here
the
with
channel.
Marketplace.
We try to do
what
this
would
every
you
single
do if
day.
the economy slows
I know
so
today's
much
kind
that
of
we
weird and
enter a
haywire, and
recession
we've had some technical
before
difficulties,
we
but
see strong,
I appreciate the likes and the
consistent signs that
subscribes.
inflation is slowing?
Stop back
In
in.
other
Most
words,
days of the week, we're in
stagflation.
here just day trading the SPY. And
So I don't want to get into too many.
it's calm. You know, this
but,
is like one of those. It's a circus, right?
It's
a Fed
hard to
circus
deal
for a
with
day.
hypotheticals. So let me
And
just say
it's hard.
that
It was hard
we have
taking
to
a
use our
trade
tools
today.
to
This
support
whole week's
maximum
actually been
employment
hard.
and price
You know,
stability.
I haven't traded
made it
less
clear that
than I
right
have
now
in
the
the
labor
past
market's
few days
very
because
strong. You're at near
every day I'm
50-year
walking in and I'm going, what is this
We're at
nonsense?
or
They got
above
setups
maximum
that aren't
employment.
trading as they should trade.
50-year low in
Yeah,
unemployment.
all these classic setups aren't
Vacancies are
working.
very
And
high,
I'm always
wages,
about
nominal wages
high
are very high. So the
probability,
labor market's very, very
softball
strong. Where we're
wins.
missing
Why
is on the
wait?
inflation
Why
side.
take on another
And
risk?
we're
There's
missing
no
by a
need
lot
to,
on the
because the
inflation
other,
side.
you know,
So
the other
that means
200
we need to
sessions.
really focus
It's
on
a
getting
no-brainer.
inflation under control, and that's what we'll do. I think as the economy heals, the two goals come more into.
Oh yeah,
play. But right
we were
now,
watching setups
clearly
that
the
you were
focus
like this.
has to be on
I can't count how many
inflation
times
down.
this week where I said, yeah.
Thank you, Chairman.
It's an easy
Powell.
trade.
Greg
Everybody's
from
going to be on it.
Market Watch. You spoke a little bit ago. You said that
every
the
know,
US looks-
like
it
a
looks like we have
basement
a structural labor
boiler
shortage in the
room
economy. Could you
home trader is
expand
like
on that? Talk a little bit more about that. And really, are
1,
you
2
talking
end
about,
up, 1, 2 end
putting
down.
Congress action on increasing like
Not
legal
today.
immigration, things like that. Thank
Well,
you.
not this past
So
2
what-
weeks have
what I
been
meant by that,
a lot of
the structural labor shortage is
past 2 weeks
if
have been a
you
lot
look
of they
at,
print, but they don't.
where we
Like,
are
dude,
now,
so
as I
we
mentioned,
went right down the hole on
if you
Friday,
just
right?
look at demand for
And
labor, you can
under
you can look
normal
at
circumstances,
vacancies
yeah, you
plus
chase
people
that
are
hole into
actually
Monday.
working, and then you can take
But
supply
what
of
they do,
labor.
they bought it
Are
right
you
back
in the
up
labor
on
market?
for Monday, and so you got all these
looking for a
people
job or
trapped
have a job?
short.
And
All
you
these
have
people that
more than
left
4
money
million
in the
people
market
short.
for a down day on Monday,
we
and that
don't
happened on
see,
both sides, up and down all week
despite
long.
very high wages.
It was
and an
every
incredibly
beautiful
tight labor
classic
market, we
setup
don't
was
see
just
participation moving up, which is
like
contrary to what we thought. So
the extra money that you're supposed to be
upshot of
making
all
in these
that
trades,
is
they just
the labor
snatched
market
it,
is
and they did it
actually-
again today.
It's 3.5 million people at least smaller than it should have been based on pre-pandemic just assumed population and reasonable growth.
Yeah,
and
400
aging of the
Cs are now
population.
400 Cs.
Our
That
labor force
they
should be
called them out at
3.5 million.
$1.30 or something. They're now $3.41.
They're easy. Lots
And I'm
of
on the
easy ways to
phone
get
in my
better
left
numbers than
hand.
that if you go back a
I'm
few
not
years.
trading.
So why is that? Part of it is just accelerated retirements. People dropped out and aren't coming back at a higher rate than expected. Part of it is that
Dude,
we
they're
lost 500,000 people
$3.59
who
right now. They're
close
just
to 500,000 who would have
pumping
been
right
working,
now, pumping in the
from
market. I mean, look at
and Part
this.
of it is that migration has been lower. We don't prescribe, it's not our job to prescribe things, but I think.
Look at that
if you
move.
ask businesses,
Look at that blast off
pretty much
right here.
everybody you talk to says there aren't enough people.
Just
we need more
destroying.
people. So I tried to identify that in a speech I gave a month ago, but I stopped short of telling
man.
Congress what to do because they gave us a job, and we need to.
Now we're above
do that
pivot
job.
now. We're close to pivot. Pivot's right here. Be careful up here. If you're a bull and took this trade right here,
Thank you, Chair Powell. Jennifer Sean.
if you took this right down below, right,
you
came
say
above,
you expect growth of just 0.5%,
and you
next
ended up
year.
moving this up
Given
right
that
now,
you said the process
just be
of
careful.
raising
This
rates
is a
and
good
getting
place to take
inflation
some
back
profit
under
off,
control
some money
will
off
be
right up
painful.
here.
Have you had discussions
Good place to
within
just
the committee and addressed
You can wait
how
for it.
long
Wait to
and
see
or
it.
how
Hold on a
deep
second here.
of a recession you would be willing
So if you
to
want
accept.
if you want to take this higher,
No,
just gonna look for a little bit of consolidation. If it keeps consolidating, you want to slap the top of the key here at 403.86. You can. You can get greedy and get this if you want.
If you look at those forecasts,
But you're gonna be
those are-
looking for
those are
these bears up
forecasts
here.
for
Okay,
slow growth.
see them right over here. This is originally where they
For
sold.
a softening labor market,
Right, they're
by
gonna
which
try
I
to
mean
reposition
unemployment goes
somewhere
up,
up in here.
but not
This is all day trade
a great
nonsense
deal.
in here.
And you see inflation coming down. You see rates going up a lot. You
They just brought it right back,
those
man.
Are those forecasts, and
Like doom and
really what they
gloom.
show. We're not. we all, of course, we don't.
If you want to be a good trader, you have to just
talk about
all day long
of a recession.
All day long, and they just brought it right back up.
We make those forecasts. The staff runs, and you will see this if you look
all
at the
day long.
Runs alternative
Wish
simulations
it was
of all different kinds at every meeting, and we look at those too. And those will explore different things. But that's just upside and downside scenarios. Of course, that's responsible practice that we've carried on for many decades. But no, we don't.
I love it.
Asked ourselves that question.
This went from $1 in here was when the move started was $1.20 or $1.33 or so. It was a couple moments in here, and then it just started
Jean Young with Market
fucking
News.
ripping.
I wanted to ask about the SEP again. If you are reaching peak rates around 5% in the first half of next year, and inflation starts to decline materially, that would seem to make the real rate.
And I grew into it. I started out I try to tell people they don't, not that they don't believe they.
Into models. Is that
I started out with Bitcoin, man, when it was worthless, when it was zero. I was at the Occupy Wall Street, or Burn Wall Street Burning Man event where I started.
See the committee cutting rates until we're confident.
Like trading shares. Of course, I started with like, I want to buy the MJ stocks.
I don't see us.
That kind of stuff.
Having a really clear and precise understanding of what
that's slowly morphed into going down really bad trading holes.
Happen like that. It'll be a test of for cutting rates. I think in the event it'll be a question of do we actually feel confident that inflation is going down in a sustained way.
Well, I got people saying I got people that are probably upside down in positions right now saying nothing's bullish about this. Yeah, I want to do some trading. I like. Hold on a second, brother. I mean, look at that right there. Look at that. That's crushing. Yeah, that was really fast. This is really soul crushing, right? If you're at least if you're a bear, you didn't really. I mean, I guess you caught this right here. But you didn't get the bloodbath that you were looking for. We've been talking about 35 or what is it? Not 30. 38.50 for a week now, right? And you're not seeing that right now. You're just seeing them wrapping the day up on you. Yeah, I didn't meet good traders at the at Burning Man. I met Tech Bros. Yeah. Yeah, he was he was there. He was there. Elon was there, and yeah, man, I remember all that. I've got I still have video. I still have video. I have it like buried somewhere on Facebook. I'll try to dig it out. I still have video of me then.
He had to quit. I've been there. Have you ever been there? You know where that is?
So hold on, say it again.
You know where Galileo is?
Where he is now?
No, like where his frickin' whole trading operation is.
No.
You ever been there? You know where it is?
No.
It's like
He's
Fairfield, Connecticut.
Is he still trading now or no?
He's stepped off.
I thought he was doing the yoga thing or something.
Yeah, he's a weird dude. He's like so philosophical these days. But anyways, they have black vans right outside the gates, and then you go in there and your cell phone is marked. It's like it's crazy. It's crazy. It's my wife did some consulting there, and so I'd go in there and be like, oh, guess what? No signal. And it's an interesting place. It's not something that you see every day. I'll tell you that.
This is wild. I don't think you're going to see the market unpin until. I don't think you're going to see the market unpin until after OPEX. I don't see it. I mean, unless JPM gets their 385s. Well, where's the collar at? Does anybody remember where the collar is at?
Did you put up the spreads that I sent to you on your screen?
I did. They did.
All right, so 25 cents to 75 in like 2 weeks without even working at it. You know, it's sort of ridiculous. Everyone should do that trade. I mean, it's free money. That's bad coding. Is essentially what that trade is. They don't get the whole surface right, so it's broken. It's a broken trade. But I take it like when that stops working, I'll have to actually really work. You know what I'm saying?
Yeah, I have to. I'm trying to bring it up right now. I'm having trouble bringing it up. I haven't really wonky like issues right now. It just like went blank. So JPM is mid-range 3,800, 3,835.
Who's that, Marco?
Now JPM and everybody that follows them into OPEX, can they get down to? I guess the big question is, can they get that pin strike on the close? Like you want to see if they try to hit that into the bell on Friday. That wouldn't shock me where we are right now. It's not that far away. Yeah, I'll go through the trade with you. Okay. So people in stream want to know about the trade. Maybe we can type something up and post it. Yeah, the market can unwind after OPEX. Chase, I was looking at the unwind. Yeah, I got to go through comments. JPM sold above 4,300, then below 3,100. Last time, so like the JPM trade's not at the biggest trade in the market, but so many people traded that trade that they're trying to expect. Yeah, so Volwiz is going to post the trade on. Are you going to post it on Twitter? So he's going to post it on Twitter right now for you, so you can have a look at the trade, and he'll post the. Are you going to post the snapshot as well? The picture that you sent me. Yeah, so if you go to Twitter to his handle right now, he'll post it up for you. Right on. So people are saying thank you. So, can they trade that down into OPEX to nail that? Yeah, they can. Last 5 minutes, last 20 minutes, last hour.
Runners, and I get that, but like that's not my style. So like when I get my objective price, I'm just done. Like I totally understand how other people trade their way, and I get it, but I'm not going to be, someone who leaves runners on. I just don't do it. It's just not my thing.
I used to do it. I don't do it anymore. I feel like I have slippage in the. I feel like that's where I get all my slippages when I leave runners on. I used to do it when I used to do it if I had like 200-300 contracts and shit. I'd leave stuff on, and now I'm like directional. I'm in for the move and then I'm out. And that's on a small time frame. But I try to catch trend wherever it's going. Be in for the move.
Freeze your mind, right? Because if you meet an objective, right? If you say I'm going to turn this into this, and you meet that objective, like what you're going to do, at least personally, me, is that I'm going to be start thinking about other things down the line, right? So that's whatever. That delivery was made. I made my money. I'm done. I'm moving on to the next thing. So one of the worst things you can do, I think, as a trader is looking backward and go like, what should I have done? And I think that really bothers people because they go, oh, I could have saved that, or oh, I should have made more, and that is aggravating. So you shouldn't waste your time doing that. Right?
someone's asking about the thoughts on the VIX dying. Do you see the VIX dying? Oh my God, VIX did die.
Well, the event's gone by.
Yeah, VIX just made a giant gap.
They usually try to like nail that thing before Jay starts speaking, but
It killed it.
the VIX is meaningless. If 90% of the option volume is happening in the next couple of days, why are you even looking at VIX, right? Don't people get that?
I don't know. Yeah.
Like it's a basic concept. If all the option volume, everything that drives vol is happening this week, then why would somebody look at VIX as a predictor of something bad happening? It's irrelevant. There's no demand. There's no real demand for like VIX calls anymore. I mean, 50 Cent once in a while come in and say like, oh, I'll take like, a million of these, but that's when VIX is 18 or something, right? So what is it right now? 20?
Yeah, it's 20, 21, 23. It needs to be down at 18 or $19. $20.
And then what you do when the VIX is 20 is you start looking at like what we talked about earlier, some of the stuff that's like the puts are too cheap.
Yeah, the puts are too cheap. That's what I usually do is look for the puts that are too cheap.
Like I've always had to change as a trader to the current environment, and so sometimes buying naked calls or naked puts either is a good idea, right? It used to be anathema to everything that I ever did, right? Now it's a legitimate trading opportunity a lot of the time.
I talk about this ad nauseum now, where I say I've been every year, the past 3 years, I've reduced everything that I do down to this stupid, dumb trading, and I'm like, why have I been reduced to this? Too many wild fluctuations in the market. I'm hitting targets too fast. I used to sit in positions for weeks sometimes, a week sometimes, 3 weeks sometimes. I'd wait for an event to come in.
You're a hoper, and like the last thing you want to be is a trader. You don't want to be hoping.
Well, they're hitting my targets faster. I'm like, I'm in and I'm out, and I'm like, okay.
Yeah, so that's how that is how markets work today. I mean, they move fast per day, and then what's weird to me is it used to be the overnight ramps that pissed me off, but now like you'll get the 40-point SPX move, and then all day it doesn't move.
Doesn't move at all. And the reaction trade used to be bread and butter. Like it kind of can. Right now I like the reaction trade off the bell. If I can catch it, I like it. It's good. But it's not what it used to be. It's not what it used to be.
If you want to talk about something like looking forward real quick.
Yeah.
So how do you view the rest of the year? I'm talking like till New Year's Eve. Like I put trades on every year.
Thanks, Winky. I appreciate it, Winky.
I put trades on every year to take advantage of vol crumbling like into New Year's, right? So what I'll do is Christmas comes on a Monday, or the day off comes on a Monday. That's a 4-day week. So you try to sell, the 30th and own the 6th. That's a holiday week too, right? So a lot of times you'll see, okay, I'm going to be very specific here. A lot of times the winners for the year, okay, the vol will start rising as the option vol will start rising as you get close to December 30th. Because they're like, oh crap, I don't want to sell it until the tax year switches, but at the same time, I need to cover my ass, right? So you'll see vol start rising. So that's a tip that like I have a spreadsheet with like catalysts, and I'll like, we're like, oh, what was I thinking like 3 months ago? Stuff like that. And this is one of them that I do every year. You follow me?
Yeah, so you're saying stocks that were winners on the year are going to increase in vol into the
Vol will rise as you get closer to
last trading day.
because they need to. Someone's bidding for vol, right? So
Yeah.
yeah, and that's. So if you think about that, okay, on December 23rd, that's an easy win because you go, oh, next week someone's going to be bidding that ball up, and there you go. I do it every year.
And you're saying they come out with bullshit news articles too to pump that up, or no? It's like, why is Cat selling off right now in the last week of the year?
Is it?
No, but the people are asking about. That's
yeah. Cat here, those are good ones, right? Because XLI, both of those are in the XLI, and that is done great this year. I mean, relative.
Yeah, I've got the Dow. I've got a Dow short on so my market hedge right now in end of the year. Well, it's dated for out in March, but the Dow's done so well that I'm like this. I mean,
yeah, you know what? I like the idea. The thing is that even if I paired that up with something else, long queues, short Dow.
Yep.
I don't like that burn. That just makes me feel dumb when it doesn't work. So I don't do it.
I've got a triple leverage inverse ETF that I'm in on it.
Doesn't it? Doesn't that trade make perfect sense?
Yeah.
Long queues. Yeah.
Yeah, the queues have been beaten down this year. The queues are beaten down. They're trashed. Look at Tesla. It's just it's been trashed. And I'm waiting for this trade. I posted on Twitter this morning. I was like, all we need is this one moment of capitulation on Twitter or on Tesla down to 136. Like if you could trigger a long fund at 150 that they're forced to buy puts, and all these puts get monetized that were already on Tesla. There's a giant block of 150 puts on Tesla that expire this OPEX. I'm serious, just giant. Well, I'm like, they need to get somebody to come buy them. So I'm like, if that's
the income crowd, right?
Yeah.
And Tesla vol generally is too low. I go, wow.
Yeah, I just want that one capitulation moment, and I'll swoop right in there, and it's probably going to line up with OPEX.
Hey, people shit on Burry, but when he said short Tesla, he nailed it again. And he's a rare guy. Okay. The only guy I actually listen to when it comes to I trust your opinion is Charlie McElligott. That's it. If it isn't him, I'm chuckling in the background. Do you have a guy like that?
Yeah, Larry Williams from Stock Charts.
I know him.
I like Larry Williams. I like him. And you know what? Who turned me on was Winky. He's a guy in our chat, and he runs around wrestling people in line and shit. And he's a great stock picker. And whenever shit's burning, Larry comes out and says, "What are you, dumb fuck? Go buy that right now." And I'm like, I love that. I love old men that have been in the market much forever.
Yeah, hey. I like looking at women's legs. So
Yeah.
spank. That's a good investment. And it works, right?
Hey, Chase, brother. I've got a PayPal link in the description. I think I've got a Venmo link in the description. I appreciate you supporting the channel, Chase. I've got something pinned to my profile on Twitter. And if you can't find a way to tip, dude, it's okay. Yeah, I've got a PayPal link in the description of this video. If you go down into the description, but if you don't have to if you don't want to, Chase, my brother. So Floyd's Garage saying Gates has been ominously 10 steps ahead of anything before it comes out. And Vol was asking a question. Let us know in the chat who you trust. If there's like one guy out there that you follow. Like I was saying that Winky had turned me on to Larry Williams, and then someone just said Bill Gates. And then Vol was saying Mike Burry. I appreciate it, Chase. Happy holidays, brother. Show up again tomorrow, Chase. Wifey Alpha. People say that about Wifey's Alpha all the time.
He blocked me. I don't know why.
People say that. I hear that often, that Wifey's Alpha is everyone loves that guy.
Yeah, but he blocked me.
Your outside the money puts got burned. Yeah, that's the other part of it, is when you go outside the money. Today I was like, it has to be so much closer.
What puts does he say are burning up?
He said they're gone. Garrett, what did you have for outside the money puts today? Chase Winter saying he likes Tommy Thornton.
Yeah, he's talking about the receiver for the Patriots. Like, he's a rookie. Interesting. If that's what he's saying.
No. Tommy Thornton, and then I think Chase has told me about Tommy Thornton. And then Aaron Renfrew is good on levels. Bill Gates being short Tesla has to have made serious bank.
Okay.
Wifey's Alpha got doxxed today, huh? Yeah, I'm scared of that all the time. I haven't been doxxed, but I've had my brokerage broken into, so I don't show that shit anymore. I've gone through that. It's not fun. As I try to keep, people don't believe me about that. So like, you gotta like, there's some nefarious people out there. Yeah, Adam Mancini, I like him. You know what? I don't want to say anything. I'm not gonna say anything bad about anybody. But I like Adam Mancini. I got no problem. I got no problem with Zach Morris and the Atlas crew. I was saying last night that I have a real problem with the Senate. You know, I know that you kind of have to know that they're nefarious. I find them funny when they post, but
Hey. I mean, everyone got good news, regardless of party. If Pelosi's retiring, that's a positive news story, right? Because like that was enough. So just go away. You're 85 or whatever you are, and her husband's like constantly insider trading. So the fact that she's out.
Yeah, I do find it funny that FinTwit will eat its own, and then nobody does anything about the big boys doing it. And I'm like, that was like SBF. Everybody was on Twitter complaining about SBF, and I was like,
you know what?
I was like, he's doing the same thing that fucking JPM does.
Let's talk about that.
JPM has what? Something like, I'm serious. This is no joke. I think I got this right. Like $160 billion in fines over the years. Like it's huge.
That sounds about right. I mean,
it's about $160 billion in fines.
I'd have to think about it, but it did get trading fines, for sure.
I got the list. I post it sometimes. I posted it when SBF got busted, and I'm like, and then the worst part is they don't want to make a law just for SBF because you'd be a criminal law, because you'd be hauling in bankers on that shit, and bankers don't want like a SBF fraud law made. So let it cool down and die down as long as they could. He was pushing that card by going to testify in front of Congress, so that he didn't think that they would do that.
Who?
SBF. I think the banks want to throw him under the bus, but not when it's a hot button subject. They don't want like the Senate coming out.
That's a tough one because people they got zeros, right? So what do you do? Like the guy who was on doing the testimony this morning, he was like, it's old school investment. I go, like, dude, you don't have to put on a show, okay? And
I didn't see the interview this morning. I didn't see the testimony this morning.
Yeah, I was on all day. because they were saving themselves up for 2 o'clock. But there was nothing. It was just typical Senate dog and pony show. It wasn't that big of a deal.
So Troy Karp is saying at Gilmore Report is a good follow.
If I were to guess, this is just a guess. If I were to guess, I would say, I bet the kid, it was like a slippery slope, and he was like,
They're bidding it up again.
I do a couple transactions, and then, like, I don't think he really wanted to destroy $100 billion, but like he was in the business of doing a Ponzi scheme to start with. So, but he had true believerism.
That's the other thing. That's the thing about Zach Morris. That's the thing about Zach Morris. It's like I'm like sitting there going, you know, it's a Ponzi scheme. You know, SBF's a Ponzi scheme. Like,
all right, here's my bottom line. I do not think he's in the same category as Elizabeth Holmes.
no.
But we'll see. We don't know. There's a lot to come out, but that would be my guess. I don't think he's that bad.
I don't. I don't know. FinTwit's a weird fucking place. I'm like, I love FinTwit, but it's a weird place who they pick to be their pariahs, and then, you know, it's, you remember, like, I couldn't even make a post about Bitcoin, like up until last year before, because you'd get like attract every pumper and bot, and
Bitcoin was 40,000. I told my buddy to go get 2.
Yeah.
He was like a neighbor of mine in a condo in Waltham, Massachusetts. I said, you better watch it here.
yeah, I think Mr. Zach Morris is a giant fraud, and it pumps low float stocks all the time. But if you didn't know that, like if you didn't know he was doing that, you know, that's like saying, like, I don't have any sympathy for anybody that like was tied up in crypto when it was blasting down. I have no sympathy, and none. I'm an old school, like, S&P 500 blue chip stocks, tech that banks have backed, tech stocks that banks are backing. I'm sorry.
That's a good one right there. Like, people come on and think they know the price to book on a bank balance sheet.
Mm-hmm.
They have no fucking idea, you know, where the risk is in that at all. Like, they don't. I mean, how could you know? They're never transparent about it. Okay, and then on top of that, they're like stuffing money into like the Fed repo market because I mean, investing in a bank is legitimate bullshit trading because it's just a highly levered.
Yeah, I read the. Hold on a second, real quick. I read the entire report of what they were doing. I read the entire report. You know they were doing that. Absolutely, they were doing that. Well, these guys are saying they were monsters. I'm like, oh, you want to know who monsters are? you guys research anything of what JP, like, what these banks get busted for? It's wild. Oh yeah, Bloomberg chat is wild, man. That's the only thing that the terminal's worth.
Here's a note, Chad. Don't send a freaking tweet, okay? Don't send a freaking message over Bloomberg chat. Chad, donkey.
115 million is nothing.
Well, do you have a problem just meeting somebody at the bar and like talking it out? Like, you don't have to, you know, go through channels where you're going to be monitored and prosecuted.
Yep, Bloomberg chat, baby. Bloomberg chat's where it's at. If you can get in the right groups.
It's, first of all, it's very expensive. So, like, for the $40 a month I pay for Bloomberg access, I think that's a great value. But I don't have $3,000 a month to be tossing it, you know, a terminal, looking at, Ukrainian bonds. Okay, I don't have that kind of money. Okay, and I'm sure there's a trade there, but I'm not doing it.
Yeah, Chase is making a fair point. Hold on one second here. There's like this. Yeah, so I posted it on Twitter recently. I post it once a year or so, but there's a, you can just look up JPM fines or something like that, and there's a website that tracks every bank and all the stuff they've done, and then you can read through every single complaint. You guys, I'm telling you, they make you eat your own, and you're like, wait a minute here. You like look at what people get away with. It's massive across the market. Yeah, so hi, they're asking for trades. Okay, so here's the deal.
At Credit Suisse, it was the guy who gave away too much money. They all took pieces, but like they fired that guy right after he got caught. Okay,
so you guys are looking for trades in the closing bell, right? I'm going to tell you no. I'm going to tell you why. You've got how many reports coming out tomorrow? You got initial claims at 8:30, continuing claims at 8:30, retail sales at 8:30, retail sales excluding motor vehicles 8:30, Empire State Manufacturing Index 8:30, Philly Fed 8:30, Industrial Production Index 9:15, 9:15 capacity utilization rate. So you've got that going on. Do you guys have you guys have a Globex account? You want to trade the Globex with me tomorrow? Because that's where the trade is. The likelihood of futures being bought and so yeah. Oh yeah, I forgot about that. The ECB is coming out tomorrow. So pre-market, you've more than likely have dealers trying to just buy enough, like right there. How do you trade that? A wide fly. Trade a wide fly into Thursday, right? Take a fly for like 409, 410. Take it down to 392 down here or something. And sure, you could take the fly right if they try to pin it up in here, and you take some kind of a fly. Some kind of a fly with wings at like 393, 392, and then somewhere above here like 405-ish, 404. And that's what you're looking at. That's what you're looking at for tomorrow. That's like the expected. Like you're expecting this tomorrow. Hold on a second. Let me mute this stuff for a minute here. No-brainer trade right there. That's your no-brainer trade. You just look on the screen. Do you think we're trading out of that tomorrow? I think you want to break out of this into Friday, maybe down. You're going to be waiting. Not guaranteed, but there's a fair chance of you waiting for like a Friday. So today's Wednesday, right? We got OPEX on OPEX on Friday. You know, even if we traded this down, right, and then they.
Like Bitcoin was gold. That's exactly what gold was intended to do, right? It was supposed to be a.
And look at this. We got 389 right here on Friday, right? All they got to do is drop it down slightly to hit that 385 for Friday. And where do you buy that? Let's say you just want to go one side. You want to buy it on a high still. There was a high right here. You could have bought it on. Hopefully you can catch another high to take it down here. But even then, if it's one-sided, you're going to have vent vol kick off.
You're not showing the support lines. Like the 100 has to be right around there, right?
Yeah, I haven't even gone into. I mean, we're just on the 200 on the 15-minute right now.
I'll check.
Look at S2 down here. I mean, we're trading below the 200, but I mean 391, 390. You're not expecting much off of this right now. You're really not.
500's 39.30. So like that's going to be hard to crack. And then
You're not getting that. So the attempt is going to be to close down here at 380 by Friday. Close this gap.
a real TA guy, the whole chart looks actually kind of positive because the moving average is rounding up, and they're going to start crossing, and that's going to start right.
Yeah.
That's fine. So it doesn't. It's for me. It's a construct. The SPY is a constructive looking chart right now. Am I wrong?
No, it is. If you want to tee off up here or something and hold, possibly, but like, you got buyers right here, buyers right here, buyers right here. Who is this buying? You think this is a retail trader? Buyers right here. Buyers step in again today, right? So how do you get out of this? You
know
need.
What I think that like sometimes is like here's how I think that is happening. A guy will say, "I'll take SPY 370, 380," and they'll just sell those puts, and then they'll go, "Put it to me, put it to me," right?
Yeah, I'm looking at it right now.
They want an entry point, so we're not even close to the end of this whole process. But like, because people are still, I think.
I know that there's like these old traditional bear setups that'll like, you'll see some nonsense like this, nonsense for liquidity. This is what this was gonna be told, and then we're gonna blast down to the depths of hell. Maybe. I don't think it's today. You want to put some put spreads on for a month out from here? Sure. Like January, March or something. Okay.
Yeah, I mean.
You want a for sure thing trade? Sure.
Well, here's a for sure thing trade, 3,000 puts. If ball starts rising, you sell something, you go like, well, I was going to buy that anyway. So, sell them.
Yeah, I don't know what to say about a trade for tomorrow because
Talking about in general, right? Like, we haven't really seen it here this year. Have we seen a moment where you're like, holy shit, it's going off the rails? No. So
none of this has gone off the rails. Nothing. Nothing's gone off the rails yet. Nothing. And it's probably all tied to OPEX. So they're parking their shit so they can get paid.
Well, notwithstanding your conspiracy theories.
Yeah.
Which are highly okay.
Yeah.
At the end of the day, there's enough cash that wants to take SPX at 35, right? So they're gonna do it.
Well, I know they can, but dude, I want to know where all those fucking spreads are for Friday expiry. That's what I want to know. I can guarantee I can go in there and look at it right now, and they're gonna try to pin to that fucking number.
Well, this like JPM rolls that giant one.
Yeah.
That one of those.
Yeah, they got a January one and a February one.
Selling went out of business. They actually got sued, which is hilarious. But
well, they used to not print in the bull market, right? I don't remember them ever or like consistently printing in the last bull market. And it's it's an old school hedging system too. Yeah.
it doesn't work. But I mean, the Culvert selling that was just a disaster. They got sued. But there's plenty of put right ETFs out there that have $300 million in them. They're doing they're rolling it. Like JPM has to do a roll, right? Every month. And everyone knows about it. So they know where the open interest is and they go like, all right, so
Yeah, selling calls is good, Luke. I like that idea. I don't know if I'd sell them for Friday. I'd be looking for like, the thing is you can possibly sell futures in here. I like that trade. What's that?
I'd be surprised if that happened. I'd be very surprised.
Oh yeah, like 4 o'clock in the morning or some shit right in here. Yeah, right in there. Cash picks it back up, tries to sell it down. Maybe. It's possible.
Yeah, it is. It is possible. It is possible. Highly and my, but see, that's me. That's me thinking, right, as a trader, if I saw that, exactly that, I would be a buyer. For short-term buyer.
Somewhere over there. And you get some good news in the morning or some shit like that, and boom, you're off and running.
Yeah. Yeah.
So you have to go the opposite side of the trade, take the other side of the trade.
To me, right, this chart sort of screams like an upside test above the 200 might have to happen.
Yeah, the 200 is up on
Well, pull it back a little bit.
400.
That candle spike, because you know there's volume up there.
Yep.
You know there are 4 sellers up there, so
Hold on. Do you want me to put it back on another hang tight for a second here?
back it up like a couple days. Yeah. So you know this volume up there that needs to be, and generally the charts go to, like, tell me I'm wrong on this because you're actually better at this than I am. Like, it wants to go there. It just wants to, right? It's gonna want probably.
There hasn't been a real rejection. We had an event today, so you really want that. There's nothing up here. It's just air up here.
At 8:30 yesterday morning. Okay, that spike was very telling. Dude, you're so negative.
I know. I'm like,
The upside spikes are worse than the downside spikes. I mean, this year, the upside spikes are worse. So why do you keep thinking down?
I don't think that. I think when OPEX is over, I want to look to see where people are positioned.
Right on. I get it. But just back it up just a little bit to the left. That spike at 8:30 yesterday was very telling. It was like people were looking for the exit on regular stocks that they need to sell.
This is what you're saying right here. Here's your Christmas rally. They get paid. There it goes. Slow grind up into the first. That would screw over some bears, man. That would be
You want to see, like, the bear rallies have been funny this year. It's like when ARK is up 10%, you go, all right, people are just cashing, right? It's like book cashing. So, but, I mean, the chart, isn't it? I mean, it looks goddamn solid to the upside. It just does. It just does.
It does.
And it's flagging at a level where it could break out to the upside easily. Now, will look stupid in a month, but it's very constructive. Like, what do you look at? What do you consider the most important indicator for you on a technical analysis basis where you say, all right, market's going up or down? Like, do you have one?
Yeah, so I just use a PPM and a PPO alongside a market breadth indicator, and I try to buy oversold or buy oversold and sell overbought conditions, right? Tops and bottoms. I don't care about the price. I don't care where we are. Any of that stuff. And then, so that's my big money trade. That's the one where it keeps me in business no matter what. Nobody fucks with that trade. I mean, if I can make that trade 7 to 9 to 10 times a year, I'm fucking golden. I'll never, ever, ever, ever. As a matter of fact, I usually only get the trade. Right now, I'm only getting the trade about 6 times, 7 times because of we're spending so much fucking time in this bullshit fucking down channel that's being managed that I don't like trading the sell side because it takes so much time for us to roll this shit over right now, especially I'm seeing it right now. It's like time. But But then anyways, and more irrational longer than you're ever expected. We saw that this past week. And then for day trades, it's always, I open up a chain every morning. If I'm day trading, this is what I do. Close out. So for right now in this market, this is what I would do. So you guys want to know what I would do for tomorrow? Yeah, all right. I'll tell you exactly how I do it for tomorrow, which is what I do every day, right? I'm going to close out. I'm not going to own anything into this bell right here. Nothing. And I'm going to wait for this open tomorrow, and I'm going to check both sides of the chain. That's what I do. I check both sides. I look. Yeah, I just heard that. Do we just get the bell? Okay, so that's the bell for the day. So what I'm going to do tomorrow is come in tomorrow morning, and if I see some shit that's too overpriced, right, I'm not going to buy that shit. People will tell you things like, well, it costs more because it's going there. That's bullshit. And then I'm looking for that option to go as high as it possibly can, the high-priced option. Let's say you've got a 30 delta put that's, I don't know, a dollar, and you've got 30 delta call that's $2. I'm going to be looking for that $2, $30 delta put or call, right? To try to max out that option and trade the opposite side on the put side. That put just went down to like 10 cents, 30 cents. And I know we're going to get a swing off that. And I'll jump in there, grab that put. I'll be in a trade for 15 fucking minutes. And I made my money that it takes you to make, I don't know, a week, 2 weeks, flies, 30%, all that nonsense. What's that?
Don't be rude
No. Not you. I don't. I'm not talking to you. I'm talking to like.
Your audience doesn't need you to say, well, you make X, I make X.
Well, no. If I'm sitting in a trade, I don't like the risk in this market sitting in a trade for like 2 weeks or 3 weeks. This whole day right here, right? You don't ever want to be sitting in that trade for an overpriced option for. I mean, how many hours was this? This was 9:30 in the morning until 1:55 in the afternoon. You're sitting in a call trade with just full exposure, and none of it printed. None of this printed.
At 1 in the morning, like that doesn't even make sense. Okay, like to you, maybe you have a lot more risk on than you personally like. But you're not full exposure at 1 a.m. trading, futures.
I'm gonna have to check and see what I did notice this. The calls still held some value down here. I was a little shocked at that. And when we sold this down, the calls people weren't diamond handing their shit again.
I mean, I know you better than that. Like, you're not full exposure at 1. So that was.
No, I don't like chasing. I don't like to have to do the work if it goes the wrong way on me. I know that guys do that. If I'm sitting in it so right now, right now, if we can get rid of some of this vol today and some of the vol tomorrow, I can go right back to a normal setup day and. Ow. Yeah, Chase, there's so many calls out there, Chase. There's so many calls out there. There are so many calls out there right now. Yeah.
That's a good idea because there's a holiday there, and then people are going to be in the 13th. I know 3 p.m. report.
Oh no. So I want you guys to. So I looked at CBOE data last night, and a ton of calls came in. I posted a picture of it last night at like 11 o'clock at night. People bought calls hand over fist last night. Yeah, that's what they did. They bought truckloads.
my friends don't go like, you did a good job. They think you did a bad job, right?
All right, hold on. Let me close this out. Let me close this out. And I'll give you a call. Hold on a second. I got to close this out. I'm going to give you a call back in just a minute. All right, keep talking. I got to turn the stream off. I'm a little bit over time. Yeah. Hold on one second. Give me just 2 minutes. I'm going to wrap this up. Tell everyone have a good weekend. All right, hold on one second. All right. I want to thank all of you for tuning in today. I hope nobody got blown out today. There wasn't a lot of blowing out to be done today, which was good. We saw some of the premiums still sticky, right? Like a sticky inflation. It's kind of like a slow sell-off today, right? What really wasn't too bad. Some of the in-the-money options on both sides, the puts printed for a nice minute down here. The calls, though, kept some of their value right up into this end of the day. I like great conditions for trading, and this is not, from my experience today specifically. Normally, I come into these events and we'll be talking about the options chain, and they will be weighted to one side. There'll be a viewpoint. Today, they had both sides juiced. That's what it was. So I'm not going to be looking for any. I want to see some of this. I want to see tomorrow. Some of this vol just roll off the market right now. I want to see some of this juice. I want to see people pack it up and go home, and let the market do its thing into OPEX on Friday, and see if we can make a move. Maybe we can make a move on Friday into the bell, end of the day, or maybe there's a move in the beginning of the day on Friday. I want you guys to have a great night. I'll catch up with you tomorrow. I'll be live streaming tomorrow. You're going to anticipate some classes coming up in the coming next 2 weeks. We're going to do some private streams for you guys and try to teach you guys some concepts from moneymakers. Maybe I can get at Vol Wizard to jump in on one of these trading classes so you guys can try to learn just a simplified trade that's a regular moneymaker so you don't get blown out of this market. I had a DM this morning asking me, how did you find a consistent trade? Every trader and investor out there has to have a way to make consistent money so that when you're doing dumb shit like I do, you can actually blow that money up and not take too big of a hit. So we'll be I'm going to talk to him right now outside of stream and see if we can find a way maybe to not just post on Twitter. Maybe we do like a private Zoom call or something, or a private stream where you get just an invite. If you sign up at CaptainJimJames.com, I'll try to put something like that together, and you guys can take notes and all that stuff and try to find the right way to buy or sell this market that's consistent. I want you guys to think about that stuff too, because you want your trades to be a softball all the time. The softer the ball, the less trades, more. I know this is going to win. I know this is going to win. I know this is going to win. JimJamesNavy.com. And I'm telling you, I know you guys follow people out there, right, that complicate so much shit, and they have to publicly make it complicated, and it does not have to be complicated. So I got you guys covered out there. I'm going to talk right now with VolWiz and try to. And some of you guys and his trading's not that complicated. It's pretty simple stuff. So I'll be catching up with you guys tomorrow. Expect this to grow into something for him to work with you guys on. Make sure you're following him on Twitter as well, at VolatilityWiz. I'll check you guys out in a little bit. Chase, take it easy, brother. Joey Harper, bro. Love you. Tony Cheese, Rival Dave. Who else out there? Andre, Poor Badger, John Dickus, BD's in the house, Ocean Fantasy, Floyd's Garage, Steven Ciceros, Tony Cheese, Constantine, Ryan, Sparky's in the house, Erm's in the house, James Andreas, Pat 8, Ergo, Chase, my man, Richard Romero, Mitch Halcock. Did I get that right? Halleck. Mitch Halleck. Garrett Capshaw. Joe Billick's out there. Just some guy. Darth Molly. Who else is out there right now? We've got Thane 144. Nino's in the house. Hello, Nino. Matthew's in the house. Who else is in here to the end? Rashad Lewis. Luke. Thane. Oblivious. Donnie, who else is in here? I'm trying to get new names in. Onion News Network's in the house. The Market Rebels here today. Right on, bro. Everybody's in here today. I'll catch up with you guys. Chetan's in the house. Annie Nelson's in the house. Rohit's in the house. Bryant's in the house. Shift's in the house. Graham's in the house. Where we roam. DJ Darendal. Rockward. Avery. Indices We Trust. Crazy Eddie. Career Low. Everybody's in here today. I'll check you guys out tomorrow. We got a whole nother day to trade tomorrow. Omar's in the house. Powell portrayed hawks and the market saw doves. X, take it easy. Steven Thana. Crazy Eddie. How does it feel, Crazy Eddie, to be passive today? Right? All this bullshit goes away and you get... Vol is saying he was passive all day long. He's over there watching the Senate hearings and shit. Gerald McGill, high on life. Y'all take it easy.